Hey, welcome everyone. Thank you for joining Stock Sniper Trading. Welcome, guys. My name is Ron. My partner is Dave. It's 12:15 p.m. Eastern, and it is Wednesday, July 29. Today is the day, guys. It is FOMC in less than 2 hours at 2 p.m. Eastern. They're gonna release the federal funds rate. It's set at 3.75%. And at 30 minutes later, at 2:30 p.m., we're going to have Kevin Warsh, the new chairperson, will be taking over the podium. And he'll be talking. He'll be giving a little bit of guidance as to what's going on, and also taking questions from the audience. Okay, guys, this is a very volatile session. That hour of FOMC. I highly stress and recommend that everyone trades with proper risk management if you are deciding to trade at that time. If not, sit back, relax, watch what happens, learn something, and maybe trade after, maybe trade tomorrow, trade later in the Tokyo session, maybe take the rest of the week off and trade next week, okay? Everyone should have their plan. And what we'll be doing is we'll be analyzing what's going on. If there is a setup, I will be taking a trade. I'll be managing my own risk management, as should you guys as well. Okay, guys? So we've got some time before we get to 2 p.m. I've got a couple things that I want to do before we get into the charts. Just want to go over every day, the day-to-day news today, and just maybe briefly go over an FOMC blog just to get everyone aware of what this session is and what it could mean to trading gold and Dow Jones. Okay, if you're already trading today, the markets are moving ahead of this Fed decision, and hopefully you're doing well today. Maybe you're not doing so well, but that's trading, and you must be journaling and learning from your wins and your losses. Okay, guys, and we're going to get into this. I hope everyone's having a great day today. It's also hump day, midweek. Thank goodness the weekend is almost here. And we're just going to get started right here with some news. Forex Factory, we had a little bit of news coming out of Europe, not much. We had nothing going on in our North American session around 8:30 a.m. Eastern. The snipers were trading that session with Dave in the Zoom. And hopefully you guys grab some pips in there and learn something from Dave. We have the crude oil inventories every single Wednesday at this time. Notice the number. It's significantly different from the forecast and the previous week. Why? Because things are intensifying in the Strait of Hormuz, and things are getting very, very, very serious over here. So that is a different actual number if you are trading crude oil. These inventories come out every single week, every Wednesday at 10:30 a.m. Eastern, and they're letting us to know about the supply and demand of the crude oil barrels, okay? And also, here it is. 2 p.m., guys, our federal funds rate, which is set, the previous FOMC was 3.75%. In the forecast, it's set at 3.75%. It's set at a pause, no change. However, it could increase. When at 2 p.m., when they drop the number, it could be a 25 basis point increase, and you'll see 4% here. Then that would really move the markets, because the markets don't expect an increase. The markets are expecting a pause. However, it could also be a decrease. Who knows? It could be a 0.25% decrease. It could go down to 3.5%. That would also shock the markets if that happened, because it's a very, very slim chance of a decrease in the federal funds rate, but I've seen it before where 97% was a pause, and the slim couple percent, then they did change it. So, and the markets got very volatile. So it's not likely, but we'll see what happens. Okay, and then we have an FOMC statement. Then finally, 30 minutes later, a new 30-minute candle will open, and new volume, momentum, and the speech by Kevin Warsh will be coming in here. And this can last anywhere from 30 to 45 minutes. If you guys remember, Powell used to do this for years back, and now he's been replaced by Kevin Warsh. Okay. If you want to listen in on the background, you can listen in on it. And I highly always recommend telling everyone later this evening or tomorrow, you can go on YouTube and it will be on there and you can watch it 30 minutes, 45 minutes, and watch it. Go over it. Listen to it. Don't be just looking at candlesticks and trading. Actually listen to what he's saying, because a lot of times they give forward guidance as to maybe what they'll be doing in the near future. Okay. And us as traders or investors, our job is to predict with high probability what could be happening in the future. So it's good to listen in on these conferences, and you can learn a lot about everything. So you don't necessarily have to be scalping the markets, but you can learn and listen. Okay. And that's going to be all of our news for today. Just remember, going in from the FOMC, 3 p.m. is power hour. Okay. That will be the last final trading hour of the day before close. And that is also a volatile hour just in itself. And that's coming right after the press conference. Okay. And then after everything is settled. So just be careful. Use proper risk management, and while you're trading. Okay, guys. Trump on Iran. There's news every single day, on the minute, every single day going on here. So Trump is on Iran, going to let them keep talking. We'll be hitting Iran harder. Okay, so things look like they're escalating. They're not de-escalating, and that can affect oil. It can affect gold, and it can affect the U.S. Stock market as well. So please be careful when you're trading this stuff. And Trump can tweet at any moment, at any time of the day, and markets react. I'm sure if you guys have been trading for the last 2 years, you guys are aware of this. If you're not, if today's your first day, you should be aware, because anytime this guy makes a tweet, it could affect the markets and go opposite direction from you. And if you're over leveraged, you can say goodbye to your account. Okay. So you got to be careful. Right now, it's this environment we're trading is a very, very difficult environment. Has it always been like this? No. But we need to, as traders, adapt to the markets. Okay. The markets are not adapting to us. We need to adapt to the markets. Okay. And in our day-to-day news, here's Kevin Warsh. This is the gentleman you're going to be seeing today at 2:30 p.m. Eastern. Stocks fall ahead of Fed decision, big tech results. We also have earnings. So there's some big name earnings in the after hours as well today. We're going through that tech earnings week and next week. So Wall Street stocks fell as the return of Iran-US hostilities sent oil higher in the wait for Microsoft and Meta earnings. So after we have our FOMC, we have power hour, then at 4 p.m. when markets close, Microsoft and Meta, formerly known as Facebook, will be reporting their earnings. So it doesn't get any easier, guys. But this is a day, maybe let the dust settle and just maybe trade tomorrow. US-Iran struggle to recruit allies in fight for control of the Strait of Hormuz. SoFi is another big tech company, is revving up consumer lending. Investors are tapping the brakes. SoFi is down almost 10% today. Wall Street races to roll out SpaceX-linked products as stock sinks. SpaceX is down almost 4% today. I think it's going to get down to that $100 level, and will maybe dip below that as well when they start unlocking a lot of shares that are held up. But don't be that exit liquidity. Be smart and buy at the good areas. You can use psychological levels. However, you're getting a good massive discount right now when it was trading, when it IPO'd and it hit that all-time high of over $225. So massive discount on SpaceX. I think it could even go down a little further. Okay. This is the big question today. Will the Fed hold or hike interest rates today? It's a close call. Crude oil is up 7% today. You can basically see it printing how it's happening. When the Strait of Hormuz is getting closed and escalations, oil goes up. When they're talking peace talks and negotiations, Strait of Hormuz is open and they're allowing tankers go through, then the price of crude oil goes down. So it's not that difficult to understand, but it's hard to trade this environment because every day it changes. So it's not really stable. Okay, semiconductor stocks are flailing right now. So you know what we were saying, anytime tech is not going to go up forever. Eventually tech is going to start to sell off, and could be where the markets start to push down. However, that money can move into different sectors. It can move into financial sectors. It can move into safe haven sectors. It can move into other securities. Okay, but what we're seeing right now is the US dollar is appreciating. So what that's telling me is a lot of selling pressure is buying the US dollar, and it's being held in cash, maybe to buy dips after we see what happens with the FOMC. So that's another thing, guys. When you look at everything falling simultaneously, this doesn't happen often. So when you see crypto going down, you see gold selling off, you see oil selling, what we had yesterday, you have tech selling off, you have the entire stock market selling. Pretty much everything across the board is selling, but the US dollar is appreciating. So when you think about it, everything that's selling is moving. And when they're selling, someone is probably profiting, and they're buying or holding the US dollar as cash, waiting to maybe eventually buy the bottoms whenever they are established. So that's what you and I should be doing as well, right? You should be sitting on cash for opportunities like this when there's big dips to be buying in the markets. That's what we call dry powder, having cash on hand for situations like this. Imagine buying the highs and you're in drawdown and you're holding and you never got out because you don't respect your stop loss. And then now you're watching a lot of traders or investors licking their chops at these levels at some of these securities that are trading at, and the price tags on them. So it's just like shopping, but you got to shop smart, okay? And there's opportunities for everybody. And if you just want to complain and make excuses, that's on you. There's other traders and investors that look at these as opportunities to make some equity, to make some wealth, and to make some money. It's all how you look about it. It's all your perspective and your outlook. Okay, guys? So I'm not going to sit here and talk about all of these tech securities. That's your job. You can go into this. Nvidia's down almost 3%. Everything is in here. Okay, guys? You can see we have red across the board. S&P is down 1%, Dow is down 1.66%, NASDAQ is down 1.2%, Russell 2000 is down 1.5%, volatility index, VIX is up 10%. When volatility increases, normally we see selling pressure. When volatility decreases, then we see appreciation in the markets. We see green markets. Gold is down negative 0.72%. Bitcoin is pretty much right at flat at 0%. Crude oil is the only thing that's up today, 7%. Okay. So we're just continuing to move forward, guys. There's a free Telegram channel pinned at the top of YouTube for all of our YouTube viewers. And guys, I just want to read this quick announcement. It's regarding you guys on YouTube. It's going to affect you guys. But the day was coming for this. We were not going to stay on YouTube forever. We've been here for 6+ years now, trading alongside with you guys and our private Zoom. But now what we're going to do is, well, I'm personally going to start to dedicate more time to the snipers in Zoom, where we're going to have more private sessions. And you guys are more than welcome to unmute your mics and we can have a conversation and you guys can dictate what we want to go over and things like that. I will be here to cater to you guys. I've always wanted to do this, but I always wanted to grow the YouTube channel as well. But it is getting overwhelming doing both of them simultaneously at the same time. So my focus will be on you guys starting Monday. And also, we're not leaving YouTube entirely. We'll be here for 1 day per week on Mondays. And come September, we'll be going back to our regular scheduled programming where we're going to do 2 weeks of Tokyo, 2 weeks of New York. And also the Tokyo Mondays will be also available for YouTube. Okay, guys? And I won't be entertaining the public chat on YouTube. I don't even have it on right now. It's for you guys. You guys can do whatever you want in there. I don't even see the YouTube chat. I'm sorry, guys. But I'm going to be catering to the guys on Zoom and doing everything to them and the Discord channel, okay? But I just want to read this. This was from myself and Dave, just so everyone knows. So we want to also say to the YouTube community, you guys mean a lot to us, but we need to also dedicate time to our snipers to help them become the best traders that they can be. And you can join us at any time. You're more than welcome. We'll have the 50% promos pretty much always on any plan, and you're welcome to join this. This is more of a a private community with traders that want to take their trading a little bit more serious, are a little bit more focused, and really know what they want to get out of this. This is where we have less disruptions, and we stay focused over here. Okay, that's the most important thing, is staying focused when you're trading. Okay, so I just want to read this real quick. First and foremost, we want to sincerely thank every single one of you for the incredible support over the past 6+ years. So Dave and I started the YouTube in June, I believe June of 2020, just right after COVID. We wanted to help traders around the world understand the financial markets and learn how to trade. And I believe that we've achieved that. We've done well. We helped subscribers get up to 100,000, and that's good enough. I'm not looking to grow this channel to 1 million. Now I want to focus my time. That was one milestone we did, and we've achieved it. Now we got to get back to business, back into the Zoom, what we normally do here. So together, we've built an amazing community of traders and accomplished something we once only dreamed of, helping over 100,000 traders subscribe to the SST YouTube channel. This milestone belongs to every one of you, and we couldn't have done it without your continued support, loyalty, and dedication. Beginning Monday, so starting Monday, as we continue to evolve and improve the learning experience for our members, our live YouTube trading sessions will be reduced to 1 day per week every Monday, okay? So if you still want to stick on YouTube, you're more than welcome. We'll be there on Mondays live with you guys. I will also be uploading like tutorials and education 1 or 2 times per week. They'll be the shorter ones, like those 20-minute ones. So we'll be uploading more education videos on YouTube and be live 1 day per week. The schedule will remain in place throughout August and continue into September, when we return to our regular New York and Tokyo live trading sessions. So this is for you guys, for our snipers on in our private community. So it's more time with you guys. While our public YouTube streams will be reduced, our private education is only getting stronger. So this is for you guys on Zoom and Discord. You guys will be getting a lot more private attention and everything like that. So for the remainder of this week, myself and Dave will be continuing analyzing trading the markets live inside our private Zoom room. So tomorrow and the rest of the Fridays will be taken off. So tomorrow I might be private, but we'll see. We'll see. Maybe we'll finish off this week. I'm not looking at the chat, so maybe that will help me a lot too. These smaller interactive sessions provide a much better learning environment where snipers are encouraged to. And now I'm talking to you guys on Zoom. So I encourage you guys, when we go private, like when I'm with you guys and we're not, I encourage you guys to ask questions in real time, to unmute your microphone and participate in discussions. It's so much better when you can unmute your mic and you can talk to me, we can have a conversation, and we can help each other on these calls, okay? Learn directly alongside myself and Dave, receive more personalized education and market analysis, and build confidence through an interactive community of serious traders, which we are trying to do here. We believe these private sessions offer tremendous value and create a far more engaging experience that simply watching a live stream doesn't offer. So also for Fridays, guys, from time to time, we'll be taking days off to spend with the family. If there is some Fridays where I'm not doing much, maybe we'll just come on. We'll do a 1-minute scalp session and education on Fridays. If there's NFPs, we will potentially come in for those as well and things like that. Okay, but we'd like to have maybe a Friday off as well. Okay, just like you guys, maybe to take Fridays off as well. Okay, so that's everything here, guys. You're welcome to join the team and join this private community. I hope a lot of you guys on YouTube do eventually get in there, and you can learn and trade alongside not just myself and Dave, but all of the amazing snipers we have in our group that are here. Okay. So let's just continue moving forward. Here's our website, guys. If you do want to sign up, there is still this 50% off promo, and you're welcome to join in there. And over here is a blog. So I'm just going to get into it because it is 12:30. We have 90 minutes before the FOMC. I just want to get us just to understand what is FOMC, because I always know on these calls someone's first day here, first week, and probably has no idea what FOMC is. So I just want to go over this. What is this? Okay, so what every trader should know, FOMC week. So the Fed's decision can move markets in seconds. You will see that right at 2 p.m., right first 5 seconds when they release that number, it's going to get very volatile, okay? Volatility creates opportunity. Preparation creates consistency. So let's read what this is. Whether you're trading stocks, futures, Forex, or options, the decisions and commentary coming from the Federal Reserve can create significant volatility and trading opportunities. For many traders, FOMC week is where fortunes are made or accounts are damaged, depending on how risk is managed. So everyone here, including myself, has a different risk management but we need to manage our own risk. Okay, my risk is different than yours is different than mine. I can't control that. Everyone has their own risk tolerance. I highly recommend that you don't over leverage or over risk or over trade during these high impact events, because you could really do a lot of damage to your account. This is where you got to be really smart and responsible with your trading. So at SST, we believe preparation is everything. So we're going to break down what the FOMC is, why it matters, and how traders can navigate this week's market moving event. So what is FOMC? Stands for Federal Open Market Committee, is the monetary policy making body of the Federal Reserve. The committee meets regularly throughout the year to determine interest rate policy, inflation management, economic outlook, employment objectives, and future monetary policy guidance. The Federal Reserve's decision influence borrowing costs, consumer spending, business investment, and ultimately the direction of the financial markets. Why traders care so much? Markets are forward-looking. It's not necessarily the interest rate decision itself that moves the markets. It's whether the decision matches, exceeds, or disappoints expectations. Even when rates remain unchanged, traders closely analyze. So we have a high probability that we're going to have 3.75% and remain unchanged. It's like a 94% chance. So what do we need to listen for? We need to listen and understand about the FOMC statement. The economic projections we don't have on this FOMC session today. There's only a few of these ones that have the economic projections. It's not on today's. There's a dot plot forecast, Federal Reserve Chair press conference at 2:30 with Warsh, and future rate expectations. So a single sentence change in Fed language can trigger billions of dollars in institutional repositioning. So we got to listen. Is he hawkish or is he dovish in his commentary? Because if he starts saying that we're looking to increase rates in the near future, maybe 2-3 times, that's a much different conversation than someone saying we'll be looking to decrease rates in 2 to 3 times within the year or next year. So it's a completely different, and the markets will start repositioning themselves. You'll see selling and buying. Okay, so key events to watch: the interest rate decision. The first market moving event is the official rate announcement. So far it's set at 3.75%. We'll see what happens right at 2 p.m. Questions traders are asking: will rates remain unchanged? Are future cuts being discussed? Is inflation still a concern? Is the Fed becoming more dovish or hawkish? The initial reaction often creates sharp volatility within seconds. You will probably see some FOMCs in the first 1 minute candle can be 300, 400 pips. We have seen this before. You can treat it as if it's an NFP event. It can be very volatile within a minute. Some traders gamble. They put buy orders above, sell orders above, and hope for the best that one gets triggered. But what if it's a spin top candle and it triggers you above and below and then consolidates and you're screwed? Or if you pick the incorrect direction. So if you want to flip a coin and you want to gamble and you want to play that game, try it, see what happens. And but you're not basically trading, you're just gambling. I don't gamble, I trade. I trade responsibly. So the dot plot shows where Federal Reserve officials expect interest rates to be in the future. Traders use the information to gauge future rate cuts, future rate hikes, long-term economic expectations. Markets often react more strongly to the dot plot than the actual rate decision. So this is Kevin Warsh. This is the gentleman we're going to see. You guys are used to seeing Powell. He's no longer there. His term is up, and now we have a new chairperson. So Kevin Warsh and his press conference begins at 2:30 p.m. Eastern. This is where things often get interesting. Fed Chair Kevin Warsh answers questions from reporters and provides additional insights into the Fed's thinking. One unexpected comment can completely reverse the market's initial reaction. Many experienced traders wait for Warsh's press conference before committing significant capital. What typically happens during the FOMC week? So before the announcement, that's what we're seeing right now. Markets often become choppy, range bound, and unpredictable. Right now, before the conference, you see markets are selling off. Institutions reduce risk while waiting for new information. Many traders become frustrated because setups fail more frequently than normal. During the announcement, expect large price swings, increased volume, wider spreads with your brokers, rapid algorithmic trading, false breakouts, sharp reversals. This is where inexperienced traders often get trapped. And then after the announcement, what can we expect? Once markets digest the information, stronger directional moves can emerge. That's why I recommend, if you're thinking about trading, trade after. See what happens and trade after the fact. You might find better trading environment. You might do much better than trading the actual news event. This is often where some of the best opportunities develop. Patience pays. The first move is not always the real move. Common FOMC trading mistakes. Chasing the first candle. One of the biggest mistakes traders make is jumping into the first move after the announcement. The market frequently whipsaws in both directions before establishing a true trend. Trading oversized positions. Volatility can double or triple during FOMC events. A position size that feels normal on a regular trading day may become far too large during Fed announcements. Ignoring risk management. No setup is guaranteed. Even the best technical analysis can fail when major economic news hits the market. Always know your stop loss, maximum risk per trade, and your daily loss limit. Over trading. Many traders feel compelled to trade every move. Professional traders understand that preserving capital is often more important than forcing trades. Sometimes the best trade is no trade. Okay, so what can we do? Some tips. Reduce your exposure. Consider lowering position sizes until volatility settles. Focus on key levels. We're going to get to a top-down analysis. I understand some of you guys are waiting for that, but we'll get to it. Major support and resistance zones become extremely important during news-driven events. So that's what we're going to do. We're going to do a top-down to establish these zones. Let the market show its hand. Okay. Wait for confirmations. Patience often produces cleaner entries and lower risk opportunities. Protect your profits. If you're having a strong trading week already, don't let one volatile news event erase all of your gains. Expect the unexpected. The market doesn't care about opinions. Remain flexible and react to price action rather than predictions. Final thoughts. FOMC week is one of the most important events on every trader's calendar. While the headlines focus on interest rates, successful traders focus on what truly matters: risk management, patience, discipline, and execution. Volatility creates opportunity, but only for traders who respect it. Okay. So at SST, our goal isn't to predict what the Federal Reserve will do. Our goal is to prepare for every possible outcome and trade what the market gives us. Okay. So as we head into another exciting week, another FOMC, remember, trade the reaction, not the prediction. So always stay disciplined, protect your capital, right? Without capital, you can no longer trade, and let the market come to you. Okay. So that's a blog. If you guys want to go over that at any time, we've got lots of blogs. There's blogs on the 1-minute scalping education, an NFP report. We're going to have an NFP coming up very soon for the first week of August. So there's a NFP blog. Here's the FOMC one I just read. We'll be going through a CPI in the next coming weeks. So if you need these blogs, they're available. They're all for free on the website. Okay, guys? And finally, before we get into the charts, thanks everyone on YouTube joining. We've got 265 viewers, and we do appreciate you guys. If you guys can kindly leave us a like on this FOMC session and hit the subscribe button, we do appreciate it. Okay, guys? So let's get into this. I'm going to get started with the top down on gold, and then we're going to do a top down on US30 as well. I'll be watching those two securities for today's FOMC session. And you guys watch whatever charts and securities you guys will be looking for. So everybody on Zoom, welcome guys. Good afternoon. Thank you, Justin. Welcome. Sergio, thank you for joining. Kai, welcome. OSS, welcome. Thank you for joining. Icon, thank you for joining, brother. Emmanuel, welcome. Are the Feds going to increase, lower, or keep the rates the same? High probability they're going to keep them the same. small chance that they increase. I don't think there's any chance of a decrease on today's FOMC, but we will see what happens. Welcome, Krina. Thank you for joining. Mike, welcome. Welcome, guys. Sonia, welcome. Thank you for joining. Amrit, welcome, brother. Thank you for joining. Trevor, welcome, buddy. Thank you for joining as well. Okay, guys. And everybody on YouTube, thank you guys for all joining. I don't have the chat. You guys have the chat for yourselves. So we're going to treat it like that, a public chat, okay? So it's for you guys. You guys will probably see spamming. You'll probably see signal chasers. You'll probably see people making fun of me. That's your chat, okay? So you guys got to deal with that. I won't be moderating it, nor will I even be looking at it. So I don't even have it up. So I have no idea what you guys are saying, but I just want to say to you guys, if you guys are here to learn and you're focused, I appreciate you guys. But if you're here to play games, then I'm sorry, guys, you're just ruining it for the others on our YouTube. So I do appreciate those that are here to learn every single day with us. And you guys know my true intentions are there for you guys, but I just don't want to get distracted in the chat. I want to just focus on the charts and the candlesticks and our guys in Zoom, okay? So that's just how we're gonna move going forward on these calls, okay? And then later at another time, then I can open up the live chat again and get back right into it. But for now, I don't wanna get any distractions, okay, guys? So it's nothing to do with you guys, it's just me. I just wanna stay focused, that's all it is. When I'm trading myself, I'm not entertaining any chats. I'm just looking at the charts and the candlesticks and following what's going on. So that's all it is. It's just for me, not for you guys. Okay. And there is also that free Telegram link pinned at the top of the channel. Okay, guys. So I'm gonna do the top down. The time is 12:45, so we have lots of time. Okay, we have still an hour and 15 minutes before the FOMC, so we don't need to rush our analysis. We can take our time doing it, hopefully you follow along with me, and maybe you can learn a little bit more this way. Maybe you'll learn more because I'm not entertaining the chat and just talking. Maybe I'm just right into it, and maybe this might benefit everybody on the call. So I hope it does. And I welcome your feedback at the end of the call. So you guys let me know if you enjoy this style of analysis. Where we're just looking right at the charts, okay, guys? And I'm talking to the guys on Zoom. Okay, so first thing is gold. I'm gonna highlight, like I normally always do, the all-time high is up here. We hit it on January 29th, 2026 this year. It was right by 5,600, that psychological number. So you can see, if you're doing a top down every single day, you're going to start to memorize dates. You're going to start to memorize candles. It's just going to become second nature because you know you're doing it every day and we're nowhere near that all-time high. So you should always know, if you're a gold trader, the all-time high is 5,600 and it was hit on January 29. Like this weekend, when you're going to your family and friends and you're talking with them, just open up conversation. Say to them, hey guys, did you know on January 29, gold hit the all-time high of 5,600? And that sparks a conversation. Some of your friends and family will say, who cares? Talk about something else. Some of your family and friends will say, wow, that's interesting. What else do you know? Then you can tell them, did you know that it's on a downtrend sloping down since it hit all-time high? And we've been pushing down. So this is the all-time high trend line. Notice I'm going from the highest point and then I'm connecting it right to the nearest body and I'm extending it from there. I get this question a lot. Some of you guys probably in the chat are asking, why don't we go from wick to wick? You are more than welcome to do that. If you do it, stay consistent, stay with the wicks. That would be your wick trend line. However, I don't do it at the wicks because I know that the trading at the wicks at the highest or lowest points trades on low volume. So I want to stick with where the volume is, and the volume naturally is where the candle opens and closes, okay? And right there, A to B. So if I hug those bodies and I continue to extend it down right from those two bodies, look at, we are still below the trend line. It came back up there, lower high, push back down. Came back right up there, again, push back down. Came and actually touched the trend line right over here in mid-May, and it continued push down. We came back up in end of May, May 29, touched it again, pushed back down for a new low, came back up, lower high, again, a new lower low, came back up again, early July, back down. Look at, we tapped into it last week, and look, just tapped into it, continue. We came up again Monday this week, and they're still pushing it down. So we are still below that all-time high trend line. So you can see that the sellers are still controlling the market above us. They're controlling all of the offers. So do we have specific zones and points of interest? First thing is, when you're learning this, is when you go from this point, like, I wouldn't start analyzing down in here. I would just, to learn how to do this, is just follow these black candles, see how they push all the way down, and then right where that wick comes off of, you can pinpoint it if you like, because that made a significant rejection right there, and it came right back up. And what I do is, whenever I find something like this, I look at the number, and look at the number is 4,399 and 83 cents. So it's right at that psychological number, whole number of 4,400 on the dot, and it came right back up. So when I'm analyzing that, I'm asking myself, why did it wick off like that right at 4,400? And it makes logical sense that that's where all those pending buyers were sitting. And then I ask myself even further, why are they sitting there waiting to buy gold at 4,400? So then I continue to ask myself, well, if I look backwards at this yellow line, maybe I can answer my own question, okay? So if I go backwards, see the yellow line, go backwards, go backwards, go backwards, and then you will basically get the answer you're looking for. So this is how I learned how to do this. And this is why I want to stay focused on these calls, because I can walk you through how my psychology works when I'm learning price action. I don't need to entertain the chat or get distracted, is what I'm trying to say here. So are you guys following? Like, I can't even, when I ask you guys and I say, are you guys following? Normally I look in the chat and you guys are all yes, yes, yes. I don't even know if you guys are, but I'm basically just on that voice, and you guys say, yes, I'm following, or no, you're not following. I don't know. But right there, I follow the line, and then you can see something happened at this point in the past, right there. You can see it came up, and look at the wicks. And then when you're studying the wicks, then you go even further. Look at the wicks now. See, come into here, and you know when I'm doing wick analysis, you know when I say, did this blue candle do its job and continue to fill that wick right there? That answer is yes. And then it got rejected and closed right there. So right here is an opening point of interest. The body closed there, the next one opened. So the buyers on this day, October 21, did they do their job? This was trading at an all-time high, previous all-time high of gold. They came up blue, 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 but look, they failed to fill that wick, and then you see the big selling pressure coming down. So then the first thing I do is, what happens when it gets to the next point of interest, the body to body? Did it find a wick there in support? No, it continued to break down. So this was a previous all-time high zone right here. And we can look at the exact date and time. It was Friday, October 17. We went into a weekend, Monday, October 20, and then we came into October 21. And look, if I stretch this zone now into the future, which I normally do whenever I establish a zone, get in the habit of stretching it into the future and have an alert in there. So that, look, there was the first day, December 12th, it came right back in there. And what were the results? Push back down. Did it fill those wicks? No. And then look, it continued to consolidate, come right back in there again. December 18. Finally, there's the blue, strong, bullish ignited candle, start of the new week, Monday, December 22, right before the Christmas holiday. And look at it. Did it close above? Did it do its job? Did it fill those previous all-time high wicks where gold was trading all-time high at 4,380? The answer is yes. Did it close above? The answer is yes. So when that happens, guys, I make the red zone to the green zone. I give the benefit of the doubt that the buyers are stronger than our sellers. Why? Because they physically closed above the zone, okay? So when that happens, there's the breakout, and then it finds another seller, finds another resistance. There's tweezer top highs. So when you're learning all about this, this is how you're going to learn. Look, those two wicks are identical. They're equal, exactly, right at 4,550. I cannot make this up if I wanted to, okay? You draw a line and you will see for yourself. Look. Are those equal? They are identical. It's not a higher high and it's not a lower high. They're equal. There's implications of what are tweezer top highs and why the market does this. And then look at the number, 4,549 and 49 cents. Okay, so this is how you'll learn how to do this, right? But I learned how to do this on the 1 minutes. because I didn't learn how to do this on the daily. I then transitioned into the daily. If I want to be a swing trader or an investor, I'm doing the same thing, right? But these could be 1 minute candles where it comes all the way down in 1 minute. This could be all the way down in 1 bar or 1 day. Now, let's look. When it comes all the way back in there, what's happening in this green zone? They're accumulating those buyers. Yes, it did break down where the sellers did bring it down there, but it came back up and it started to close again in here where it consolidated. Then you get another big blue candle when? The start of the new year. If you do a yearly candle analysis, the 2026 started with a bullish ignited candle. Guys, the entire year, okay? We're halfway through it. We're in July right now. So if you looked at the yearly candle, 2026, it started bullish ignited for gold, okay? Have we retraced all the way down to it? Have we taken out all of the bullish volume this year? Well, stretch into the future. We almost came right into it right there, and there was that wick off on my birthday right here, Monday, February the 2nd. That was my birthday present. I bought that. No, I'm joking. That was my birthday present. I had a buy order sitting right there and I got filled and it was a happy birthday to me. No. And then now look, stretch this zone into the future. And then look at now what we see. We see a liquidity grab. So when you want to learn what is liquidity, you see how I'm teaching you guys everything. We learned about how to do zones. What are equal highs? What are bullish ignited? What's a wick? What's a rejection? Now we're learning what is liquidity. You guys know below a zone, liquidity sits there. And when that happens, the market knows that, okay? And look at what it did. Now walk through this with me. On this day, Monday, March 23, this was a black candle. This could have been considered Black Monday right here. It was black, black, black. It came all the way down right there. Pinpoint where it wicked off of, right there. Draw a line. $5 off of 4,100, another psychological number. Then it grabbed all this liquidity and look at the result. It came right back up and look at where it closed. At the yellow line. Then it built a double bottom and continued to hold. And when you look at this individual day and want to learn what this day was, this was coming off of a weekend, Friday, look, it's Monday, and we traded this live because I start Monday morning calls with you guys at 7 a.m. 7:03, you can go back right now and look at this date. 7:03, Donald Trump tweeted when it was down here, it was at the lowest point of the day, and at 7:03, when this was a big black candle, Donald Trump tweeted that the Strait of Hormuz is now open, and we've reached an agreement, and everything is all good. And that's when it filled up all of those orders. Then I ask myself even more. I take it even further. Who is getting these orders filled down here? Institutions, corporations, Donald Trump. The big dogs are down there waiting to get filled with minimal to zero drawdown. And they're not trading for $20 like us or $100. These guys are trading for billions upon billions of dollars. So they get filled, their order gets filled, they release the catalyst, the news, and then look at how it reacts, and they're in the money, okay? Now, again, we pinpointed that yellow line. If I want to continue to learn, go backwards and look, is this yellow line significant anywhere, okay? And you'll learn for yourself. There's the blue candle that closed above. That yellow line is basically cutting it in half. All the way back here in November, right? And then you go back, then it was a resistance there, a wick, a wick, a wick, a wick. There was when that big blue candle, structural candle on November 10 closed above, and it was using it previously as support. Look at here. Tell me how for 4 days back in October, the bottom wick was right there. This candle came all the way down and closed at that yellow line. This candle opened at this yellow line. Just tell me how this blue candle closed above and it used that yellow line as support right there. I can even go back further into history, but I know that gold never traded up there because it was coming up from this big uptrend from September, okay? So you see how you can really learn how to do this. That's what I'm saying, guys. Take 1 day out of a week and just study the candlesticks. Just learn. Look now, we're studying this zone. That was a black day, came in the green zone. Again, it wicked up. But look, we're not breaking any resistance above us. Like, I'm still showing you the zone I should be analyzing up here. Okay, but let's just continue going forward. This black candle did in fact close below the zone. That's a specific day, Friday, June 5th. That's an NFP day, okay? Had the volume to close below. When that happens, the sellers prove to me they've closed below that green zone. So now the green zone turns to red zone. And then I see the next 2 days traded in the red, back down. Then it came back up. Look, 3 days, wicks rejected, back down. This red zone is still above us. Look, we're trading right here. Here is today's FOMC. There's that big red block. Notice how I didn't even do up here, okay? You can follow it. From that rejection, look at where it came up, and then it stopped right there. There's your next point of interest up there, right there. And then if you want to draw a zone there, you can draw a zone there. You've got wicks to base your zone off of. Right there, there's your next zone, okay? See how everything, it was just trading within these zones and it closed below, came back up to this zone, back down. So these zones stretch into the future. How far? Go as far as you want. Go into 2027 if you like. Go into 2030. Go into 2100. I don't care. Just there's zones. They're established. Now we got to analyze all of this. See how I'm consolidating it. I'm getting it down to maybe where we're going to trade today or tomorrow. Right there's a pivot. I can see body. Then I can go backwards, see a wick. I can see those wicks. I can capture them with a zone. Yellow line is my point of interest. There's my zone. Green because we're still above it, right? And then there's my supporting zone right there. Do we have a zone of a red zone above us? Yes, there's the pivot right there. Notice the numbers again, okay? 39.75, 4100, 4175. We're in those increments of 25. 4100, 4125, 4150, 4175, 4200, 4225. It's an online auction, okay? How do they do the basis points on the FOMC? 25 basis points, right? Okay, so if you want to have another zone, there's your next zone. See how the zones are zoning right there. Okay, so now we see how we are consolidating. Look, it came down. It went back up. It came down. There's a double bottom, but when we were coming back up, we got rejected at that red zone and the all-time high trend line. Then that was a failed double bottom. And you know, when I say traditionally it's got more volume to break out and go even higher, okay, that didn't happen. It's not guaranteed, but that block guaranteed that it came right back down. Now we're coming back down into FOMC. So our lowest point of the day almost is down here. Is it going to come back down? And are we grabbing liquidity below that zone? Will it come back up and do something like this next week? Possibly. Are we going to come back down, close below, and then this green zone turns red, and then we're continuing to sell gold off? Potentially. Or is it just going to continue to consolidate inside this descending triangle and build to break out? Potentially, okay? So see my analysis now. Now, anything below this yellow line in this green zone, what if we do come down here? I see how I have a gray chart. I didn't analyze anything down here. How do we do it? Let's go backwards. Now go back with this green zone, backwards. I guarantee you we're going to hit something. And look, we hit this double bottom, which took us to the all-time high. Right over here, it came down, one bottom. There's the neckline, came back down, equal double bottom. There's the double bottom with the bigger volume. And then pull back down, higher low, higher high, higher low. Break through the red zone, pull back Christmas time, Happy New Year, and that's when we went into the all-time high. So look, we are retracing potentially right here where the whole move kind of started at this double bottom. Where is there a liquidity grab? Yes. Is this an A+ setup? Yes, yes, and yes. How do I know that? Because I know a double bottom. There is this. That's a double bottom. And then I see the wick that came down there. That's where they grabbed some liquidity, all stop order. Normally it's a bigger wick in this situation. It could be a wick like that, but in this situation, that's where they stopped it. So when they stopped it there, I always ask myself, why did they stop it there? There's gotta be an answer. The answer is put a line there and your answer will be, your question will be answered right there, where that big bullish ignited daily candle started on October 6th. Those buyers, okay, this is how I look at this. Whoever bought this day, when it came back down there, they were protecting their position by potentially adding another order right there and getting filled and holding their order and going back in profit. Because if it broke this, these buyers of this strong day are in drawdown. They don't want that, okay? Just like you don't want drawdown when you're trading. If you know and you can move the markets, if the market comes back to your entry, you'd probably want to protect your position there if you could, right? Us as retail traders, we can't do that. But if you know how to trade like the big dogs, then yes, you can learn how to do that, okay? That's what we're trying to teach you guys here, okay? We want to teach trading. We're not here to show off lifestyle. We're not here to show off how much money we make. We're here to teach you price action. That's the people I want on this channel. If you want to see my financials, I'm not here to show that. I don't care about that. I don't even show my wife my financials. Okay, why would I show a complete stranger financials? Okay, if you don't believe me that I don't make money, don't believe me. I don't care. Doesn't affect my life. But I want you to understand that I understand price action. This is one thing that I do understand. Okay. And how do I know that? Because I can pinpoint candles live. You watch that 1 minute education that we did last Friday. That 2 hour session should tell you enough of how accurate price action is. So now what we got to do is start to let's follow this week. Let's move into weekly analysis. So I know that the week starts off on a Monday. How did we start? We started bullish ignited this week. There it is. Monday was very, very strong. We came back up. Did the buyers do their job Monday this week? No, they didn't. They didn't continue to get back up to that daily point of interest of 41.30. And then they got pushed down. Okay. This is an inverted hammer candle. And there's the closing price. There's the opening price on Tuesday. It opened blue for a brief second. There's a tiny wick. Did the buyers on Tuesday continue to do their job and fill Monday's wick? No. Did the sellers do their job? Yes, the sellers were in control. They're in control. They've been in control since the all-time high. And there's the lower high. They continued to push down. They filled, not only did they break Monday's opening strong weekly candle, but they also filled Friday's low. How do I know that? I see a new lower low, and then it came back up and it closed right there. So now we're doing our daily analysis. And US30's analysis won't be like this. It'll be faster because I see we're at 105. But this is a good one to learn for everybody. You can do this on any security at any time. But I will do it faster. I'm not going to do it like this on US30, okay? But there's a closing, opening, okay? We know that that's important. That's our opening price, okay? Every candle has an OHLC. Not always, okay? Some candles don't have wicks, but they have opens and closes, okay? So this is our opening price today. Okay? And then when we opened, what was the result? I can tell it was initially selling pressure today when we opened. It was, because I can see it, there's a wick. It was black, black, black. Did we take out yesterday's low? So yesterday's low is also a point of interest, okay? And we see it came down lower and lower and lower. We've already created a low of the day so far. There's my purple low of the day. Okay, so I'm just going to write on this. Okay, so this is the low of the day. I can put here, this yellow line was yesterday's low. Okay, so this was yesterday's, or I'll write previous day's low. Previous day's low, which is support. Okay, why? Because the volume is still above. Okay, so it's still holding as support. Makes sense, right? If we come back down black, black, black again, maybe it could be another supporting level right there and come back up where we don't come down to today's low, okay? If we come all the way down, black, 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 in today's low, we break, then we got a job to do. We got to fill Monday, July 20 wick, and then travel right back down, right down into there. That wick is holding gold up in this green zone, right exactly at 50% of that green zone, okay? Now, the candle flipped. Look at it. Came back to the opening price. It flipped, and it was a hammer. And it came all the way up there to 4,048 is our highest of the day, right below that nice psychological number of 50. Right there. That's our high of the day so far. Okay. Could go even higher. High of the day Again, so far. So no one is confused thinking that that's it. This is the high of the day. It's established. No, it's not. This candle is going to close in 4 more hours. Okay, we could easily come back up here. Then if we do, let's walk through this. If we break this and we continue to go blue, 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 where could we go? So logic tells me it wants to come back up to test the opening of this big bearish candle on Tuesday. So I have a point of interest right there where the bearish candle opened. Okay, so that's where it could continue to fill. It could fill then from purple to yellow and fill only half of this. Okay, and then I look between these yellow and the purple line. I see right there was a body and a body right there at 4,060. Okay, so that could be another resistance point where right there at those body and body. Okay. So you see how 4,060 could be. It could come back up, go blue, 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 trade right into there and get a wick and reject it back down where it doesn't even come up to test the opening. But we're going to have FOMC volume. So it could bypass a lot of these structural points because there's going to be increased volume. But if today was just a normal day trading and it wasn't FOMC, I would definitely be highlighting these levels. Okay. And then you guys know the drill. If it continues to come up, can fill that little wick, then it's got to backfill that wick. We already have a resistance there, then you backfill that and you can continue to do your analysis, okay? So overall, looking at the structure now, before we get into the hourly, let's take a look. So it had a downtrend coming down. It looks like 5 wicks have established a bottom right here at this green zone. Then we see it came back up and we can see 3 days wicks established that the sellers are there holding it down. Then they came back down and we see another bottom where there was all of this established support, looked like it held there. Then we were coming up, it looked great, like a beautiful W, ready to break the all-time high trend line and that, but it failed. The sellers were there and now they're pushing it back down. However, today's candle has a higher low and building off of here. So we got a little higher low, but look how much still resistance we have. We have this yellow line, that yellow line meeting at the all-time high trend line. Then we could break. It could be an impulse and then boom, they bring it right back down. Or if we get up, you got to understand you're trading into that big red block later this week, okay? And they can easily come back down and break it down here, okay? So now I'm going into the hourly. Okay, you see the daily candle? I'm going now breaking it down into the hourly. Now we're going to see how it was trading today at each specific hour. Okay, I'm not going to go through all of this, but here was Wednesday midnight. We moved into London right there. Kind of London was the top last night. Then it came back down 4 a.m., 5 a.m., 6 a.m., 7 a.m. Here's COMEX 8 a.m. Big move down, but it didn't close down there. It came right back up and closed right there. Then 9 a.m. we pushed down. I can see now 10 a.m. was our lowest point of the day. And now it's coming right back up. And we got a strong bullish candle here at noon that created a new high, closed above, engulfed. So if I'm scalping, normally I cut this blue candle in half. If we're trading in between these two yellow lines, I'll show you how, okay? You could go from the yellow to the yellow and just cut it in half if you like, or you can go from the opening of this hourly candle and to the closing and cut it in half, just so we know where maybe there might be some hourly support, like right around there, right around 4,020. So maybe I'll write on here, could be like hourly support. And remember, hourly support is not as strong as the yellow lines. Hourly support is what it is. It's just support on the previous couple hours, right? This yellow line is stronger than this white line. Why? Because that's the previous day's support. Do you guys understand what I'm saying here? So if it just comes down there briefly, maybe get a little wick off of that and go and then break and then come back down, then you get a stronger support at these yellow, okay? If I go with strength, what's the strongest? Obviously, the purple line is the strongest support today. This is the second strongest. And this is the third strongest at the opening balance. However, if it comes in here and just wants to play around here and accumulate and doesn't need to come here, if the previous day buyers are establishing a depth of market and they're putting their orders up here so it doesn't come down here, then we might see some support being created right here. And you see that on the lower time frames like the 5-minute, 1-minute candles, okay? Look at right now. We have another bullish ignited candle starting, doing its job, filling the wick. And look at, we're coming right back up to potentially the highest point of the day. But when we came up here, there was a big bullish hourly Tuesday at 11, and then it came back down. We came back up last night, and that was the highest day, and it came back down. So you see the purple line now, there's an hourly structural area. You can see there's 3 bodies right there. I can go backwards and see it came right in there and pushed back down. Okay, you can see a lot of impulse fakeouts were at this location. So it came in, back down. Hourly structure, red. Came back in, back down. Okay, now look at, we are breaking above it. This hourly candle is going to close in 46 minutes. So if it closes above, you know, this could be a big structural hourly candle. We could also find the point of control of this hourly candle. What if FOMC comes down to the point of control and then goes right back up? So maybe we can pinpoint a buy at that exact location. But I don't know how this thing will close, because a lot of these were bullish, 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 but then they got rejected and came back down. So we're establishing a good hourly strong move currently going into FOMC. However, you still have a lower high, lower high, lower high, and if it goes up, it could get rejected back down, okay? So it is very bullish right now. If you are in gold buys the last 3-4 hours, you are doing unbelievable. If you're trying to sell this, you are not doing good, because I can see this, the wicks are not lasting long, and this bullish volume is very strong. So now I'm going to go into the 5 minutes. Okay, let's see what's going on. Where did all of this bullish volume come from? Okay, now on the 5 minutes, I can pinpoint exactly. It was 10:10 when we hit the lowest point of the day, and we're coming right back up. Big bullish volume at 12:50. 12:55, new hourly candle, 1 p.m., continue to go and drive. Now we have a 5-minute candle that just took out the highest point of the day and getting rejected back down. It's closing right now. Here's the close, okay? So we could get right into live trading right now. You can see how the 5-minute candles came in there and back down. That's a massive rejection, okay? So now we are below it. Is this going to be like a short-term little liquidity grab, bring it down, and then now we're going to see some selling pressure coming down. Now, if you come down, there's a big blue candle right there. If you cut it in half, right, it could trade down to there. If you do want to trade a couple minutes, 45 minutes before FOMC, you can scalp the markets. However, if you're waiting for the news to drop, you can definitely wait, okay? And then now, finally, if you want to add some indicators to complement these structural areas we have, we can do that, okay? So we add a 9 EMA. You can see we are well above the 9 EMA. See, the 9 EMA is right at 50% of that blue candle now. So what I'm saying is, if it sells, it could sell just black, 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 right down to there, to that red line, to 50% of that big bullish candle, which previously was, look, it started at that big bearish candle. They held it down, resistance, that yellow line. And now we created a little bit of 5-minute support above it. Okay, so it could come down there and go right back up. If it breaks that, then you got the opening price. Big, strong yellow line. Okay, right there. Could come down, go back up and go. Okay, so we could wait for pullbacks if we want to buy. Because there hasn't really been a significant pullback as of yet, okay? That candle got rejected, but look, it opened and it's still holding high low, and it could be filling that wick and continue to drive. Now we want to see in the red zone a wick, push it down with a lower high. Then that's telling me that short-term sellers are pushing the market down. They're trying to, but they might not be successful. So that's what we got to continue to see, because the buyers are very strong and can break right through here as well, okay? That's the 9 EMA. 200 EMA is the bigger one. You can see the 200 EMA, we just had a golden crossover. Right now, you see the 9 EMA just crossed above. This is where we're getting a lot of this bullish volume in the market right now. And then finally, the SST daily indicator we can add on our chart too. On any specific time frame, if you look at the daily, this is the daily candle. Opening price came down, lowest point of the day, big wick. The head of the candle is basically right now, just started at 1 p.m. All of this big head on this daily candle is represented in the last 20 minutes right here of these 4 5-minute candles. That's what's representing this strong daily head, okay? So this could be deceiving, because as you see a daily candle, it looks very strong, but it's only represented from the last 20 minutes, okay? So if they reject this and bring it down, we could lose all of that and then come back down, trade our wick, okay? But that's strong momentum right now, okay? If you want to look at RSI, the RSI on the 5 minutes, just in the last 20 minutes, this move right here that has created the head of the daily candle is extremely overbought. The RSI is at 83. I don't use RSI as a signal to just buy or sell, but it is extremely overbought on the short time frame. On this move right here, that just basically started at 1 p.m., last 20 minutes, okay? So it's signaling to sell, right? We're signaling that it just swiped the highest point of the day. They got a lower high, still holding. It is overbought, so we could see some selling pressure coming down. But you got to know, if you're selling, you could find support here and support here with patient buyers waiting to buy and bring it right back up. So if you're scalping down, you got to understand, like for example, if it comes down black to that red line, that's a 100 pip move, and it could just come right back up. If it breaks down and gets down to that yellow line, you have the 200 EMA, you have the opening price, that's 150 pips sell from here. And if you don't grab your pips, it might not continue to go down all the way down there. It might just stop right there and go back up, and then you're stuck. So you got to understand, if you're taking sells, you are counter trading. No matter, I don't care how you look at it, that's your counter trading. So you got to know, when you're counter trading any position, you could be coming into where buyers are pending or waiting. Okay. So you got to have counter trading rules, just like you have to have trend trading rules. If you don't want to sell, you're probably waiting for a potential buy position. You're waiting for a pullback. You got to have trend trading rules. Unless you want to continue to buy the highs of every move, that's your choice. If you want to learn how to FOMO trade, try it. But you won't be as successful FOMO trading as opposed to waiting patiently for the market to come down to these desired locations. Okay, so that's gold right now. Guys, I'm going to do US30 because we got 40 minutes to go. Okay. Awesome. What do you got? 4,052 is 50% of the previous day's candle. 4,052 is 50% of the previous day's candle. Okay, perfect. That's good analysis. Okay, so we're trading into 50% of the upper daily candle right over here. Yeah, so could find some now sellers right in that area to continue to push us down, because yesterday had a lot of selling pressure. Okay, so you see where we might just consolidate right before FOMC, and then FOMC could spike gold to come all the way back up, or it could push gold to come all the way right back down, because like I was saying, the daily head is deceiving, right? It's only represented by the last 20 minutes of volume. Okay, so that's what I see. Okay, it could be deceiving, right? Okay, so let's do Dow, because we got 40 more minutes to go. So let's take a look at the Dow Jones. Okay, so this is completely different. We're not on gold, we're not on commodities. This is now Dow Jones. This is US stock market over here. Okay, so, and it's different from NASDAQ, right? So it's a completely different index, but we can still analyze it, right? If we're looking on the daily, this is what we got on the daily. This is what we have to analyze. This is what we got to work with. Okay, so doesn't matter what the candles, how they look. This is what we got to work with. Okay, do I want a better chart to work with? Absolutely, but this is what the market is giving me. This is what I got to analyze. So I got to continue to do my top down, how I just did gold, how I do any other security, the same method. Okay, so is that an all-time high? Yes. What day was it? July 7th, okay, this year. Do we have now 2 bodies of candle to base a zone off of that all-time high? Yes. Orange line to those 2 bodies, extend it into the future. I can see yesterday we almost came in there, but then they rejected it. And then today, look at the open. Did it fill its wick and do its job? No, lower high, and sellers pushed it all the way back down. Okay. Do we have like an all-time high trend line so far to base off of? Well, I have so far an all-time high wick. And if I bring it down to the closing of yesterday's body, that's my trend line so far, if you go with trend lines. So it could see that it could be a fake out right up there, and now they're pushing it down. Okay, now do we have a base of support that I can draw a supporting level or a pivot right there? Why do I choose this area? You guys should know why. There's a body close and a body open there that's holding the market, because all I can see is a wick, a higher low, and a higher low so far. So there has to be some base of support. Now I look at that yellow line and I look backwards. There's a wick, and some bodies, and then look backwards. See the yellow line and those 2 bodies? There's where I construct my zone. That was a red zone there, just like I did right there. 2 bodies, just like I did with today's, or sorry, the all-time high right there, those 2 bodies. Same thing I do there. There's the yellow line. We saw the pivot right there. There's where those 2 wicks got rejected. So if I go now this way, I see, yeah, it broke down, but came back up, closed above. Now it's a green zone. And then continuing into, then I can see this day break, Thursday last week, came in there, still stayed above. So that is a green zone below us. Stretch into the future. I can come down as low as Thursday's wick to capture everything. And then I got a wick and a nice wick right there, okay? So you can see now, this is what the sellers need to break. This is what the buyers need to protect, okay? Now let's base a little bit of information. So we are in a bull trend. You can see it came up. There was, oh, sorry, I didn't want to use the trend line. I want to use my, 1 second. It came up, pulled back. There's a nice pivot, draw a yellow line at those bodies, 49,850. Then we came back up, new higher high, pulled back into the zone, higher low. There's a nice move to the all-time high, pulling back right there. Okay, found support. We came back up for 3 days, almost got a new all-time high, but technically we have a lower high and massive selling pressure pushing back down. So FOMC is going to dictate, are we breaking this? And if we do, where could we fall down to? Well, let's just do logic. What do we have below the green zone? I've got a wick, equal wick right there. So let's just highlight those. Those could easily be broken, okay? 50, look at the number, 51,300 on the dot. Those 2 equal lows on Monday, June 22 and Tuesday, June 23. So if we come back down, black, 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 and we fill that wick and we break, yeah, we found some good support there. It could be there again. However, if that breaks, where are we going down to? So you have a major pivot zone right here and a strong bullish engulfing candle. Is it a structural bar? Did this bar close above all of the structure to the left? The answer is no, it didn't. It's not a structural bar that closed everything above here, but it is still a significant bullish engulfed bar that engulfed this previous Wednesday's selling pressure. So if you want, you can cut that blue candle in half in case it comes down into that strong candle right there. Look at the number, 50,400, just by cutting the opening and the closing price in half, okay? If it continues, then where did that big blue candle close? And where's the next support? Right there. So I do have now some supporting levels below me, okay? And then let's just go off of trading yesterday. Important key areas. That's where we opened yesterday. That's a point of interest, right? Every candle that opens and closes is an interest point. Okay, we opened. It was initially bearish yesterday, came up with a higher low, did its job yesterday. Buyers backfilled the wick. We created a new high, but not a new all-time high. So the sellers still, whoever sold the all-time high is still there protecting their position, brought it down and closed it right there, okay? So there's my closing price yesterday and my opening price today. Right there. So that's my opening price today. So when I'm writing on it, this is our opening price. When we opened, it was initially bullish. It was blue, blue, blue. Did the buyers do their job filling yesterday's wick? The answer is no. How do I know that? There's a lower high. You can see it's lower than the previous day. So our high of the day looks like it's established because we're trading all the way down here. So that's our high of the day. Again, I'm going to say so far because it could be a recovery and it comes all the way back up. So that's our high of the day. Okay, and rejected, still lower highs in the market. And then this is where I draw like another zone. You see from the yellow to the purple line, there's a wick, there's a wick, there's a wick, and then there's a wick and a wick. So sometimes when I'm drawing another zone off of the all-time high zone, right there. Guys, this is how I'm just showing you an example of how I do this, okay? Because you see right there, like when I'm showing you a line to a line, 2 structural points, there's a wick, a wick, a wick, and a wick, and a wick inside. There's 5 wicks in there, okay? So that's another like red zone. And then when I go backwards, I see that the sellers, listen to what I'm saying. This is where you pay attention. The sellers that sold this big day on Wednesday, July 8, look, it goes with what I'm saying. When it came back up, they're protecting their opening position. There's a rejection. There's a rejection. there's a rejection. There was an impulse move yesterday, but they still squeezed it down and closed it. And today they protected it. They were there protecting it. Right now, pushing it right back down, okay? And look at it. Is it still intact? Yes, okay? So there's a small hidden block above our all-time high block. And are the sellers there? Yes. Now let's follow it. So the sellers now are there. Black, 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 black. Did they find support at yesterday's opening balance? No. So this yellow line currently is now resistance, okay? This is resistance, daily resistance. So if it comes back up, this is where I want to see if sellers are here today. If it comes back up, blue, like come back up, right there at yesterday's opening balance, which was support, is now, with the volume below, could be resistance around 52,265. Now, the sellers continued pushing down, pushing down, pushing down. We've established a low of the day so far, but it could come down even further, okay? So 51,815 is our low of the day so far. It could come down lower, and then let's see where it could go down to. So if we come back down black, black, black during FOMC and break this, we need to come down and fill Thursday's wick. That's our last week's low, okay? So it's right like in our green zone. So I'm not going to draw another yellow line. It's our green zone representing that. Like I can lift it right up to the green zone. The entire green zone is, I want to see if it will come down. If we lose the green zone, then you see, then we're filling that wick, and that's why I have that yellow line right there at those two equal lows, and it's a nice psychological number, 51,300. And if it bypasses that, then it could be coming back down. Then we'll see what happens at this, 50,865, because that could be the daily support that started this move back then. Then again, this yellow line represents 50% of this strong bullish engulfed candle, okay? And it's right at 50,000, psychological number of 50,000, okay? Now, it's coming back up so far, okay? So this is how we're trading now in this little zone, okay, inside here. So let me do it with some arrows. We came up bullish, coming back down, went 3 days back up. Did we break for a new high? No. So they've established that. Now they're pushing it back down. It looks like a M pattern, right? There's like, if you don't look at the all-time high, if you just look at right here, there was the top. That could be the liquidity grab of the all-time high, and it came down and it's coming back up. Here's the second top coming down now, okay? So you guys know if this was a 5-minute structure, we got to break this. It could break, be an impulse, come right back up, and then go reverse back up. However, if we break this and close below, this entire green zone on US30 turns red, we have further room to sell off. And when you look at the weekly and the monthly candle, if you take it on a higher time frame, look at this. Look at the weekly this week. It was very strong, blue, blue, blue. They pinned it, and look, it's just a pin bar. So with FOMC, if we close below here, that would be a nasty weekly shooting star candle that has a lot of room to continue to drive down, okay? If you look on the monthly candle, the monthly still, we've got 2 days left on this candle, but FOMC will dictate, are we going to continue to push down in August, or is it going to hold and try and come back up, okay? So that's what we got going on the hourly now. We're 1:30, 30 minutes away, so we got lots of time still. Look at all of the selling pressure, okay? So there is an M top on the hourly, okay? How do I know this? Because you can see hourly support was right there, okay? Draw a white line. There's the pivot, right? Look. It came up. Oh, man, why am I picking the wrong one? It came up, back down to the support, back up. There's M, came back down to, should have broke right there. It should have broke at 11 p.m. last night. It didn't, held at midnight. Then it came back up, 1 a.m., 2 a.m., London, 3 a.m., couldn't break anymore. Then look at the closing bar right there, 6 a.m., that's all the confirmation you need. Then you got your bearish ignited candle, push down, low wick. Again, next hour, bearish ignited candle, fill the wick, pop, come all the way down, close at the low, small, massive selling. Wow, 3 black crows are what those candles are called. Massive. Like they didn't even allow them to come back up and test 50%. They were just bearish, ignited, and each candle successively closed right near the low. So it just kept pushing down. If you look at the 4-hour candle, it's a massive 4-hour bearish candle. Yeah, there it is. So you see how we just hung around on the 4-hour candles, and then starting 6 a.m. pre-New York is when they just drop that massively. And then the next 4-hour candle is what created our lowest point of the day, and it's got a wick so far, but it's still this hanging man candle that could technically come all the way back down with FOMC. So when I look on the hourly, do we have a structural candle to base anything off of on the hourly? Yes, this one to me is structure. This one right here at 9 a.m. Why? It's a Wall Street candle. It's got significant volume, and it closed below yesterday's daily support, which is now resistance, okay? And it closed below all of this structure. So for this candle at 9 a.m., that's a candle I'm definitely cutting in half and finding the point of control. How do I do that? Grab your Fibonacci tool. Opening price, closing price, okay? The yellow line I can use as my 50% cut line. Right there. We were off of, it was representing the 618 actually. It was representing down here, but my zone will represent that, okay? So right there, how do I find my zone? You guys know how to do this. Right there. Stretch it into the future. Now, if we come back up, look at it. We could trade right into our daily resistance, and it's the point of control of that structural candle. Okay, so look at what I'm talking about. It could come all the way in there and go back down. Okay, it could definitely maybe close above here, then turn this back to the daily support into a green point of control to take us all the way back up there. Highly unlikely, because this is some strong ass selling pressure, unless Kevin Warsh says something really nice that American US30 Dow Jones likes. But right now I can see it established lowest point of the day at noon, came up strong, hammer candle. Look how it closed. It closed right at the highest point. So the next candle briefly opened black, but just for a second, then it popped, filled that previous wick, came all the way up to here and pushing down. So let's see, is this hourly candle anything special? Yes, this one completely closed below that wick and that wick. So essentially, if you have where that hourly pivot was, right there, look how neatly everything looks here, okay? And this is what I mean, like, look at how neatly everything looks. It came down, body closed there, body opened, held there. When you look backwards, that big blue structural candle Sunday, which opened the entire market up at Sunday at 6 p.m., is representing 50%. So you know when you cut that in half, it came right back into that exact 50% point and bounced off. Now, we just closed below it right there at 10 a.m. Eastern today. So you see right now, it traded right into that resistance and it's getting rejected back down, okay? So right here, 52,057, okay? So this is our hourly resistance, but not as strong as the block above us, because that's a daily zone, okay? Does this start to make sense to anybody? Or is it just making sense to me? Again, I can't see the YouTube chat, so you guys are yes, no, maybe so. Maybe you guys are saying he's got nice hair. I don't know what you guys are saying right now. But guys on Zoom, does this make sense to you guys? We're going to go more private next week where you can actually unmute your mic and ask me questions and pick my brain, and I'm there for it to help you guys. But if you're still having complications, not understanding this, then I'm here to continue to work with you guys, okay? But now we got to see some massive move where it could come back up, but it could just retrace and continue dumping down, okay? And there's a beautiful M pattern laid out, okay? Came up, the neckline, there's the second top, and there's the you even have a closing small bar right there at 7 a.m. Eastern to give you the confirmation it closed below. And then there's the massive selling pressure, okay? That's why I say, guys, identify, get pattern recognition. Okay, when we go into the 5 minutes now, here's the massive flood when it came down. That's a big, okay, look at all these garbage candles, okay? And that candle right there, base some analysis off of this candle at 8:15. That's a massive bearish candle. I'm sure it closed below all structure to the left. And guys, again, let me walk you through this, okay? If you are a trader like me, okay, on the 5 minutes, you can see points of interest and pivot points very clearly. Like, am I the only one that can see this, or do you guys see this? Okay. I always say, guys, you don't have to be a genius or a rocket scientist to figure this out. See where the market comes down, and it stops right there at those bodies, okay? I'm not saying you had to trade this, but I'm saying, do you see this, okay? When you see this, place a line there, okay? And right-click it and place an alert, okay? Had I done this, if I was trading here, okay? And then also get in the habit of going backwards too. When you establish a pivot, just double check it. Say, let me go backwards and analyze it, back test, and then see it was a wick there, and then that big bullish candle ended up closing there. So where that closed and the body, see how it created the support, okay? And then look at that wick, follow the wick. Where did that wick come into? This is how you learn how to do this, where on YouTube, you don't need me here anymore. Look, that wick came down, go backwards. It represents 50% of that big blue candle, like right there, give or take a little bit. So you see now, when I'm telling you guys, when it comes in, travels into 50% there, there's your proof, okay? And then there's the closing price. Now, when we look back, and I say at some point in time, the volume will come and revisit this area. Let's take a look. When did it come and revisit this red line? Right there at 8:15 a.m. this morning. It was a structural candle, okay? So if we now do our structure method, Fibonacci, just on this 5-minute candle, opening, closing price, I can take either one of these red lines and move it to represent 50%, okay? Any one of them. But I want to just show you where the zone is. 382,618, there's the zone, okay? Have we traded into this? No, okay? So not yet. But if I want to now place that 50%, I can, okay? I can see the highest point now is right there. It's still lower high pushing down, okay? So this is a massive, like if you just want to go in there, this would be a great selling zone. Fantastic selling zone. That's why I place an alert in here. So like, for example, let me show you, arrow. If we come back up, we get rejected at daily resistance, maybe it goes down a little bit, maybe find some hourly support, then we break through here. If it's coming in there, that could be targeting the next sell zone right in there. And that's where it could push right back down. Then we test the daily support. If it's there, we'll get a higher low, then try and break that. Maybe it comes down, then it goes in there, and then it's a double top, right? And then you guys know at the double top what can happen. Maybe it gets rejected, then it's got more volume to break that. We close below. This is and then we're coming back down here, okay? Then maybe it will bounce back up, break, then we're trading at, like I trade at each one of these locations. You guys will see next week on Zoom, when we start a top down, I'm going to keep the same charts all week. I'm not going to do a new top down with you guys because I think you guys on Zoom understand how to do this. I want to show you guys how we can trade at each of these specific levels all week, where we can just tidy up the charts and watch the volume, okay? And you'll see how I do it. I'll show you. Next week will be a fun week where you're going to learn a lot of new things, okay? But now, what are these 5-minute candles doing? Okay, so we came all the way down, kind of established the bottom right there, 12:15, came back up, pushing down, okay? So we've got our levels now, and we've got everything we need to look for today's FOMC. We can add some indicators, right? 9 EMA, we're right at the 9. 200, look at the 200. It's coming down to the daily resistance. So just look at how this could play out. If FOMC is like bullish, it comes in, it could come right into our daily resistance. The 200 EMA could be coming right down here, and then that's the rejection point, right? Let's see if that plays out. That would be awesome if it plays out like that, okay? And we've established these zones prior to FOMC, and then the indicators lining up as well with our zone. We'll see technically if that happens, okay? And then the daily bar, just so we know what's going on the daily. It's this big, massive selling candle, okay? Opening price, high of the day, right over here. Big selling pressure all day today. And if you were counter buying, okay, there was opportunity to make some counter pips, but you got to know, it came up a little bit, back down.
Came up, it tried, back down. Came up, it tried. Look at the wicks, all lower highs. Sometimes if you go on a buy like me, and then you see that the buyers are not doing their job, it's okay to get out and say, okay, I try to buy. I'm not stubborn. I'll get out of the way. You realize a little loss and get out of the way. Because if you don't, then you're taking on a massive loss, okay? Even these like buyers here that bought, you see it's not kind of moving or closing above and then pushes back down. Okay, so you got to understand too, if you're counter trading or counter market, you got to understand just because you're buying doesn't mean that it's going to go up forever. Okay, it comes up, but then there's new sellers pushing it down. It's trending down. Look at what you're going against on this huge daily selling bar. Okay, even this was a beautiful buy. If you bought any of that, that could be your daily goal. But you got to understand you're getting into an area where there was this flag, a push back down. That same flag exists right there. Like there's those three bodies. Consolidation. I always say black, blue, black. There's your zone. And look, we just kind of faked out above it and it's trading right below it again on these 5 minutes. Okay. Okay, so we're working the lowest point of the day on Dow Jones going into this FOMC in the next 15, 16 minutes. Okay. I'm going to leave these two charts not side by side, but I'll flip-flop here. Okay, gold. Did it retrace into here? No. It created a higher low and continued to move up. So let's see. Will we get a blue 5-minute candle closing above today's high of the day? I see a rejection, rejection. This could be a double top situation, but we have to be very careful trading right into the FOMC. Double tops, double bottoms, don't matter when it comes to FOMC, okay? Even though it could do this, I wouldn't trust it right before an FOMC. Okay, and another thing I want to stress is if you're going to take any trades, I'm not your broker, okay? I don't know your spreads. I don't know your slippage. I don't know your execution speed. I don't know those things. You should know those things. You're the trader. I know mine. So I know how Fusion Markets, my fills, my reactions, slippage during these high impact events, because I do trade these high impact events often, okay? So I know that I'm limiting my size down when I'm trading these, if I do take a trade. And if I do take a loss, I'm not blowing up my account. I'm not losing my entire yearly gains. I'm not like doing stupid things. I'm not, okay? Maybe that sounds different for some of you guys because you're used to going on some YouTube channel and the guy's full porting for views and having fun and using a prop firm. I don't trade with a prop firm, nor do I full port. I trade my own money, okay? So I don't trade stupid. I trade smart. I know it's hard to believe for some people, but eventually you're going to learn how to trade like this. If you want to continue to learn, if you want to continue to survive as a trader, you're going to have to learn some sort of risk management at some point. Otherwise, continue trading reckless, continue gambling in these volatile, uncertain markets, and see if you can beat the crazy choppiness by gambling. Good luck. Maybe there is some traders that will say, Ron, I'm consistent, I gamble, I'm doing good. Great. You are an exception, but not everyone is going to be like you. Most retail traders that do really well manage their risk some way. They show patience. They show discipline. They understand if they don't take a trade during an FOMC, it's not the end of the world. They understand that to wait for looking at better volume to trade. It might even come next week. They understand that implications. That's why, guys, I don't just strictly trade Forex. Okay, I want this to be clear to everybody on Zoom, guys, because we'll do some calls together where it's just stock and options and things like that. I don't just trade Forex strictly. I don't just trade gold and Dow Jones. That's it. If I see that gold and Dow are not trading well, I can go enter the stock and options market and trade that market and trade big companies or trade anything to do in the stock market that has nothing to do with gold or US30. Like if I want to trade SpaceX right now, buy a couple shares of that or sell some shares with puts. You can be making money outside of here. So if I know that gold is really choppy, that doesn't mean I got to sit on gold all day and force trades. Go to a different market. Go to a different exchange. Like go do something else. Have a variety of what you can trade. Have options. Okay, so we're about 12 minutes away. Is everyone clear as to what is going to happen at 2 p.m.? We have this federal funds rate that's going to come out. High probability it's going to be the same, 3.75%. However, if this is above or below 3.75%, example 4% or 3.5, you are going to see some crazy volatility, okay? Just putting that out there. If we see a pause, it could be already baked in. You're going to see some indecision moves. You'll see some liquidity. You'll see a big move up, big move down, but then it might settle down after the first 15 minutes, 30 minutes. And then the market is awaiting Warsh's speech, and we're awaiting this at 2:30 for him to come to the podium and tell us, answer questions. Why was the decision to remain paused? What is in store in the future? How is inflation? Job numbers, things like that. What everything he will explain. Okay, so yes, Justin, I believe 2:30 is going to be the crazy moves at that time. And it can continue to go into power hour after the whole FOMC session. If a lot of traders do trade power hour as well. Some traders take their first trades during power hour and they don't even trade the first hour of this FOMC. So everything is up to you, okay? Okay, guys, thank you, guys. We have 830 viewers on today's call. I appreciate all of you guys. If you guys can leave us a like, we do appreciate it. And if you can subscribe to the channel, we'll be here with you guys every single Monday, live with you guys. I will be uploading a lot of educational material for you guys as well. So you're going to get a lot of education on YouTube. So you don't just have to not be with us anymore. We're still going to be there for you guys, but we're just going to move private for a couple months. On all the other days, but Mondays we're here with you guys, and lots of education will be uploaded, okay? And I will be flip-flopping gold and US30 on today's call, okay? Just so we're clear. And a reminder, double check your lot sizing if you're trading, because maybe you were trading earlier, maybe you were trading a different lot size prior to FOMC, and now it's FOMC, and you haven't changed your lot size, and you forget about it, and you click a buy and sell, and now you're trading with a completely different lot sizing or position size. Please check now. It gets pretty quiet over here when I don't see the YouTube chat, or you guys are really quiet on the Zoom chat. Someone talk to me, please. Gets very lonely over here. US30 is trading right exactly at 52,000. Right at that psychological level. Notice just as they've established so far on gold, like on the 5 minutes, okay? So these are just short term, but just see what they've established and let's see if it plays out. We've established equal highs, okay? The 110 candle and the 120 candle, look, are equal high wicks at 4,050, okay? And we see lower highs right below it, okay? So far, we do have that established, okay? %30 probability of hike of rates. they've increased that because it was a lot lower earlier today. Okay, so you guys can see that it is shaping up. Like if this was not FOMC, it looks like equal highs, nice top. There's our support right here. Coming back up, like we're looking for like a double top traditionally, and then to come back down and sell down, right? For gold to sell, traditionally, we got to see a strength in the US dollar. And what would be positive for the US dollar is a rate cut could be positive for US dollar because it could see more money flowing in to buy treasury bonds, more foreign investment. Also, if it's a pause, listening to Warsh's tone of voice, if he's very saying in the future that we're considering cutting rates in the near future, the market's looking good, inflation is controlled, job employment numbers are good, that could strengthen US dollar, and then we see gold selling off. So those are just some hypothetical scenarios that we could see. What could be bad for the US dollar is increasing interest rates. Then it could see foreign investment leaving the US dollar, selling of the US dollar, and moving it into buying gold, for example. And then we could see gold continue to be bullish. Okay, so and then my last comment basically is everybody trade with proper risk management. There's going to be traders on the call who blow up accounts. It's normal. We see that on every single call. You're going to have to live with that, not myself or anyone here at SST. You're going to have to live with that. And you're going to have to go through where you're going to go through that and you're going to have to maybe forget everything you learned about trading and go back to educating yourself. If you do blow up accounts, you got to learn. Some of you guys don't take trading that serious. You buy a prop firm now on sale. You try to pass it for this, take one trade on FOMC, hopefully, and try and pass it. If you blow it up, you don't really care because that account costs you $30 or $50. But you're learning a lot of negative bad habits. And then when it comes to actually taking your trading serious, unfortunately, then you're going to have to overcome a lot of that. So I suggest trade smart from the beginning. Save you a lot of time, money, and effort. Okay, but we're still pushing down. That's an ignited bearish candle. Continue to push down. Will Trump tweet before FOMC? Who knows? Who knows? Guys, I have the financial juice right over here too, so I can bring it onto the news. We'll see all of the remarks as well. Okay, it's coming in a couple minutes. And that is a clear double top, okay? I don't know how to make it any much clearer. I'd love to take a trade right now, and maybe we'll just continue falling. If you want to take, like we see it, okay? I even map it out. There's equal highs on the 5 minutes, came up right to the highest point of the day, grabbed some liquidity, came down, came back up. Look at lower high, bearish ignited candle, bearish, pushing down. However, this could be a trap and fake out. You take a sell, and then it just reverses and goes right up bullish. So I would be careful. I know it's enticing, it's appetizing to look at that, but you never know. It's not the point. It's not the time to gamble like this. I'm going to wait for the first 5 minutes to see what happens. Regardless, you can even scalp 1 minute. Yeah, that's pretty excessive, pretty fast. Scalping 1 minute during FOMC, but it's been done, can be done, but you have to have the broker that can fill you rather quickly, okay? Yep, Fed funds rate just in 3 minutes. Yeah, so if you look at Forex Factory, there's a countdown. There it is, 2.5 minutes to go, okay? High probability it's going to be paused. However, 30% chance now could be an increase. Wow, if there's an increase. Like, think just American friends. This is, and globally for everybody. If you're already struggling with paying the bills, paying credit cards, you're in debt, and the cost of inflation, everything is going up, gas is going up, groceries are going up, higher interest rates are also gonna make matters worse. So, not everyone here is a millionaire and a billionaire on this stream. We're just some average working people trying to make ends meet. More than 60% of Americans are living paycheck to paycheck and one paycheck away from poverty. And if you increase these interest rates, you're hurting those people. You're not hurting Donald Trump. You're not hurting the elite politicians. They get their $1 million salaries and their manipulation and corruption of the markets. They do what they do. But the average person is going to suffer, and it sucks. And but this is the world, how it works, and this is what we live in. And it's not just America, it's globally. This will cause, because American dollar is the federal safe haven reserve currency, so can affect everywhere around the world, okay? It sucks, but this is the state of the world right now. Okay, so here we go, guys. One more minute, okay? I'll flip-flop from gold to US30, okay? And we'll see what's going on. Good luck to everybody. Let's have some fun. We've got 1,200 viewers. Thank you, guys. If you guys can hit the like, subscribe to the channel. If the channel grows organically like how we're doing, then we'll increase not just Monday as a live session. Maybe we'll start to do 2 days a week and eventually 3 days a week, and we'll get back to our 5-day schedule after a while. But for now, here's FOMC. Good luck, everybody. I'm going to watch. I'm just saying it right now. I will be watching for the first 5-minute candle to close regardless. I don't care if it's a bullish ignited. I don't care if it's bearish ignited. I don't care if it's showing a proper setup. I'm waiting. You're welcome to do your thing, but I'll be waiting. Okay. There it is. Like if you were in a sell, that's what I mean. Fake out bullish. Wow. Okay. So let's see the news. Maybe this is just liquidity grab candle. That's what I mean. If you went in that double top, it was looking proper, but this is FOMC. That negates everything. Okay. So let's see the number right here. 3.75, pause, okay? Not a surprise. We're not surprised about that, okay? So this is now how the market is reacting to a pause right now. Very bullish for gold, bullish for US30, okay? Let's see now. Let's follow the direction. Let's follow the volume. This is only the first minute of the open, okay? So you can see if you were in sells, that candle is a heavy candle. It's not a small candle. The range of that candle is, holy shit, 440 pips candle, okay? Accounts are blown up right now if you over leverage selling positions. It's a $45 move in gold in 1 minute. So let's wait. That's what I mean. Let's wait for this thing to close. Let's see the Dow. Like that's a big candle as well. Bullish ignited. It's a 165 pip 1 minute candle so far. Like it's large moves. That's our all-time high trend line right there. Okay, that's our all-time high trend line right by 4,100. Holy shit. That's a big candle. And we still have 3 more minutes to go. So this will be a structural candle if it closes like this. I'm sure it's closing above a lot of structure to the left. Wow. That's a big candle. Okay, so I'm just putting financial juice here. Let's see anything. Not yet. Nothing has came out. We'll wait for Warsh to speak at 2:30. So there's 12 other chair people on the board, and Hammock, Keshkara, and Logan were in favor of a rate hike. Fed votes 9-3 to hold benchmark rate of 3.5 to 3.75 range. So there was 3 chairpersons that wanted a hike, but there's 12 of them, and the vote was 9-3 to hold. US 10-year yield is dropping. 30-year yield is up. Okay, so we came all the way up there. We're getting rejected. Let's see where this final candle will close. Justin, DXY is dumping. Yep. We'll see. We'll see what happens. Okay. So big move up, got rejected. We'll see where it closes. Again, if it closes above our structure, we're just going to do our things what we do. Red to green. There's hourly. It could be the biggest fake out. Like it could be a fake out and then a selling. Like just let's just be patient. Let's let the candle do the talking. Let's let the volume do the talking. I won't talk as much. We'll let the candle talk. And look, guys, if you're trading, like just so you understand, just if the next candle is blue and it fills the wick, that's a 200 pip move just to like basically fill the wick. So if you're trying to trade with a 30, 50, 100 pip stop loss, it's not enough. You got to go bigger unless you go really, really tight, but you'll probably get stopped out. Okay. So unless you can nail a trade in this environment with zero drawdown, which is difficult to do, but you have to open up your stop loss, meaning you got to really substantially decrease your lot sizing. Okay, so did we close above anything? We've closed above a daily point of interest. Is this red zone now a green zone? Yes. So I'm just going through the mechanics of everything. This is a blue candle, opening up blue. So it's got a job to do. It's got to continue to backfill that 200 pip wick, right? It could get rejected at this daily point of interest and come back down, okay? So now we want to see the structure that will be built in the next 30 minutes off of this FOMC leading into Warsh's conference, okay? If you do want to trade, you're welcome to trade. But again, we want to establish something. That was a big bullish candle on US30, came right back down, closed. Now this red zone is now momentarily a green zone. Okay, I'm just going through my mechanics of what I do here. Okay, so it's a nice blue candle coming right back up. That's a 100 pip candle so far, just basically opened. Yeah, 100 pips, easy. Okay, but we got to figure out, will there be some resistance here? Will it continue to fill the FOMC wick or get rejected back down? Unbelievable strength. Alex, is it trapping, taking out sellers seems fake this movement? I don't know if this is fake. So far, still holding. So still very, very strong. A lot of strength. And we're very close to that all-time high trend line. So if I go to the daily, we see what's going on. Look at the daily candle now. So the daily candle it's got all of the bullish volume back in. So backfilling this wick right there. Let me just put one more yellow line. Okay. So it's getting right back up there. So this is that next yellow line we're coming to, okay? That's the 50% of the big black candle last Thursday, right there. Okay, that yellow line at just below 4,100, right there, 4,095. On the 5 minutes, it's this one right here, right here. So if there's going to be daily sellers, they will be like right in this little pocket right here from this yellow line to that orange trend line. If there's going to be some substantial selling pressure, maybe it's going to be located right there. Okay, look at Dow now. Okay, so open blue, 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 lower high, coming right back down. Now we're testing the green zone. Will it hold, build, flag, continue to go up? Or will it be a fake out, come down black, close below, then that FOMC faked out, maybe potentially grabbed all those orders up there and reversing and come back down, and then Dow will sell off, fill the bottom wick, and maybe take out today's low. Very interesting. Dow is interesting here. And we could just trade sideways until Warsh's speech in the next 20 minutes coming in. Is anybody in a trade right now, guys? Anybody entertaining anything? No, Krina? Nothing yet. Mildred, nothing. I think we're gonna get some good moves when Warsh starts to speak. But it's still 20 minutes away. Emirates, MNQ, long since 1 p.m. Okay, guys, this candle, it's going to be interesting. Closing in 30 more seconds, okay? So we got our FOMC high. Oh, look at that FOMC high. I just looked right now. 52,200 on the dot. Wow. Unbelievable. How do they do that? Look, that black candle was that wick cut in half, exactly pushing down. Okay, so let's watch this. Might close right near the bottom, still in that green zone, but this is FOMC. It could bypass this and really come down. So opened black. Okay, maybe we'll wait for a full closure as opposed to just taking an impulse trade. We've got the wick still closed at a critical daily yellow level. So let's see if the sellers can maintain this yellow line and maybe push it down, or buyers will continue, maybe test that block up there. Okay, so that's why we don't want to just trade on impulse. It came down, reverse back up. It's still in the green zone. We have to wait for a black candle to potentially close below in order to make the green to red zone. Same rules apply when we're trading FOMC. And if you take a sell, you just got to know that you're trading on an impulse prior to closing. And yes, it could definitely come trickle down and break because of those liquidity grabs and everything. This might be a time and place maybe to potentially sell with the market, okay? So it came back down to its own low, coming back up, okay? Coming back up. Will it come back down with some offers? Will it come back to the opening price and flip blue and go back up, okay? So this is the first 90 seconds of this 5-minute candle that's opened. And we're trading right at this 52,000 level. And we have a new 15-minute candle opening as well in the next 3 minutes. So if you want to hold off and look at the 15-minute time frame, maybe you might get a better picture. This is the full 15 minutes of gold, still very, very strong. So if you're thinking of selling that, look what you're selling against, still very, very strong. Maybe let's let it get up to 4,100 and see there. If we look at US30 on the 15 minutes, you see that there's a massive rejection and it's still holding that opening body of volume. If it closes, next 15 minutes could be very bearish. Look at the US30. Look at the wick of that, okay? Wow, okay, so we're watching it on the 5s. US30 could be a potential sell setup. Potential. But still got to wait for some closing volume. 2 more minutes to go. And it's trading right at that 52,000. Is it crazy? It's scalp 1 minute. Look at the 1 minutes. That one, the first 1 minute, okay, 2 p.m. And then look, it's already been retraced all the way down. So if you bought, like let's say the opening, and you didn't do anything, it's came right back down to those original buyers there. That was a 200 pip move in 2 minutes. And now look at it, it's right back down to that entry. Holy shit. And there's a lot of room for this thing to fall back down. Okay, so this could be a massive fake out. Gold is still very strong, still showing strength. Higher lows, still building a higher high. Still strong, very strong. Overbought, yes. Overbought on the RSI, absolutely. Look, it came down and back up to being overbought, okay? But RSI is not an indicator to just sell. It's an indicator to let us know it is overbought, but still very strong. Okay, so let's watch the close of this. I'm just going to watch the close of this US30. Okay, so if it closes below, this is a red zone. If it comes back in, could get rejected. So this potential selling opportunity here. And let's see, did it take out a low? Ten more seconds to go. Hasn't taken out that previous low yet at 145. So I'm thinking it's going to close below. So green to red. Okay, so it did close below, bullish ignited. Let's see if it can get rejected quickly and lose that bullish ignited open. Okay, so it's bullish ignited, still holding that bullish ignited open. Is it getting rejected at 50% of that previous volume, or is it going to engulf that previous candle? Okay, so it's very bullish. We see that it opened, ignited, still pushing up. Let's see if there's a rejection in this red zone. Notice how I went from green to red. That body of that candle did in fact close below the zone. That's why I went red. But it opened bullish ignited with buyers right away, pushing it right back up. So now we got to engage in the red zone and see if there's offers there, indeed filling it and pushing it back down, which we see with a wick right now, and it's a lower high wick, but it's still fueling itself, filling itself back up. So it could come back and close above here, and this turns back to green zone, and then is bullish again. Okay, so now it's just consolidating right around here. I think the market could be just consolidating, waiting for Warsh's speech in the next 15 minutes. Okay, so it did. Remember, the sellers didn't do their job to fill those wicks. So it's coming right back up, and there's a strong candle that opened right away at 215. Bullish ignited. Okay, but they're still rejecting it back down in this red zone. Okay, there's a good rejection. Still, it's an inverted hammer candle, still holding that bullish ignited head. We may lose it, and then sellers will maybe potentially fill that wick and drop it down further, okay? So good rejection, still in the red zone. We just got to lose this ignited head. The buyers that bought this candle right when it opens. Right back down to that 52,000, that psychological 52,000 level. Man. Okay, so it lost its head there. I'm going to go into sell. Okay, it lost its head. I'm going to sell. I'm going to place my stop loss. Even I'm going to be tight during FOMC. Right there, I'm going to leave it just above the red zone. Okay, I know it looks, the number could be a big number to you. 75 pips is my stop loss. Just above the hourly resistance, white line like I normally do, and just above the zone for some protection. Because I don't want it to flip and then turn bullish all the way up here. So I'm going to sell on US30. Want to see if it can fill that to that red line, break for a new low. Maybe trade down into these bodies somewhere down in here. If it can potentially sell down into here prior to Warsh speaking. I liked how it was bullish ignited, came up, rejected, lost the open. That's when I went in to sell. However, we can't establish the bid down in here to break these wicks yet. Okay, so it could consolidate in here. Yes, buyers could buy it right back up. Then I'm stopped out. But the sellers can really start bidding down below 52,000 here, 975. We could break this thing down. Okay, don't have a big stop loss. 75 pip stop loss, not a lot. For a potential reward of 100 more down there. Okay, so I'm going to sell on US30. I'll be monitoring this. And gold. Okay, so we got to see maybe a black candle close below something, maybe flag here. I was seeing if it could establish into this zone up here, but it's still there. Okay, so we got a nice shooting star candle with now 1 minute to go, less than a minute. I would love if this shooting star candle could close below, create a new low and close below. Then we can work with that. Maybe we get an ignited bearish bar pushing right down. It's a good candle, great rejection, good shooting star candle, but the close is important. Okay, so we did create a tiny new low. Importance of this candle is going to be very critical. Also, if it's a nice body like this, we'll cut it in half for a quick little blue candle rejection if we can retain some volume, right, into the close. Five seconds to go. Can it close right at the bottom? It will potentially blue, come right back up. Okay, so it's black. Small wick to fill. Can we just fill that tiny wick right now with that black candle and break it and start dropping? Okay. Now just flood down, right? It's got our black candle low. That's perfect. So if I just increase this to represent 50% right there, I could go to a break even, still be in the money, but that's a nice bearish candle coming down. That's good. It's great for 50 pips. I'm going to go to a break even now. Okay, break even. I have no risk. Break even. I'm just now playing with my money. Break even. Boom, it's dropping. It's dropping, guys. Right there, 75 pips. I'm going to take out 80% right there. Take out 80% and leave 20% running. So I have my total. I got filled at 915 down there. Perfect. So I took out 80% at 75 pips, and I have 20% running with a break even because we're going into Warsh's speech. So just get a little bit of money and get out and leave a runner. I don't want to keep a whole trade going because I don't know what could happen. It could flip prior to Warsh speaking or during his speech. I'm happy with that. That was a scalp. That was an FOMC scalp. I'm not looking to hold this till next week. Get my 75 pips, control my risk. I got what I wanted. If you guys saw, that was a bullish ignited candle. It came up. It got rejected in the red zone. We flipped the green zone to red zone. It came back down, pushed down. When it was coming down, I took the sell on the break of that bullish candle. You guys saw my stop loss was just above the white line hourly resistance. As it came down, I got the move. Shooting star candle broke for a low. See where I cut it in half. We got our ignited candle, short wick, drop 75 pips. Get your money, get out, and that's all you got to do, right? You can still be holding. I'm holding. I'm invested. I'm holding my 20% runner. Obviously, I want this thing to continue to drop. But you got to be smart, okay? Someone will say, Ron, you got out too early. It's going to maybe drop further. Okay. But what happens if you got a wick and it came all the way back up blue and closed above here, and then it's filling up the FOMC, and then now I'm down 200, 300 pips, okay? You can't, I don't play like that, right? When I trade, I see what happens. I get what I want. For me, 50 pips, 75 pips is great for me. For someone, it might not be, okay? But for me, that's why, guys, I do better when I'm just trading myself, not engaging in the chat and you know, I'm focused on the candlesticks. You guys do what you want, okay? I got to focus on my own trading. This is where you'll get the best out of me, where I'm not just reading spam and stupid comments. We're analyzing the markets here during FOMC, okay? And gold is still just it's just consolidating. No real big move. It could come all the way right back down. What everything started. Warsh is going to have a big impact on gold. Okay, he will have a big impact on gold because he's going to impact the US dollar. This candle now is closing in 2 more minutes. Guys, hit the likes on YouTube. We have 900 viewers. Did you guys like that analysis, that type of breakdown? Is this something that you guys are interested in learning? If you want, you're welcome to join us. There's a free Telegram channel here. Join the free Telegram. It's pinned at the top of the YouTube. We're having a giveaway on Friday where a lucky winner can win 1 month with us and the AI trade ideas. And if you want to join the team, be part of the private Zoom and Discord, you're welcome to. There's a 50% off promo where you get signals, trade ideas, education, live sessions now, private live sessions with myself and Dave, the entire Discord community. This is a nice move. Wow. Okay, let's see if we can get it down to that red area where these previous 5-minute bars retrace right down into here. That would be ideal. That would be about 100 to 120 pip move coming down in there. Let's watch the close, and we're going to cut this candle in half if we get black volume like this. Okay, all we're going to do is take this red line and cut it down as long as we get good body of volume. We don't want those skinny spin tops. We want a nice fat black candle. We just lost 400 viewers on YouTube. It went from 1,200 to 800. As soon, maybe they pipped and dipped and left the channel. Still, I can see the viewers. It's funny. They pipped and dipped. At least, hopefully, they left us a like. Okay, there's the close. Drag the red line down to represent 50% of that volume. Again, notice the candle open bullish ignited. We took it out quickly. So sellers, can they continue to fill the wick and drop it down without a significant retracement back up? Okay, so now it's blue, higher low. So now it's could be consolidating or building a pivot of support here. But we still got to test 50%. Okay. Which is stronger, 50% or the opening balance? Obviously, the opening balance is stronger, but we still want to retain 50%, and we can continue to make a lower high and drop down further. Gold is pushing down. So we've established a little bit of a top at this daily level. Now it's coming down. Will we find a move coming back up, maybe double top and then start dropping, or it's going to just continue going bullish and maybe we're going to continue to buy gold? Okay, we're getting a good move on US30. Still, it was coming down. I just love US30. It trades so clean, in my opinion, okay? Everyone is entitled to their opinion. I love scalping US30. It's just got clean bars. Each bar is got enough pips for scalpers, and it trades really clean. And it was what I'm trying to say. Like, I know today is not the typical day to look at because of the FOMC, but for the most part, it's a really, really clean trading technical index. And I love this one. Why? Because I pay no commissions. When I trade gold, and I trade with standard sizing, a standard size, and I got a good deal with my broker. It's $450 for a round trip. So $225 to buy, $225 to close. A standard lot is $4.50. Think about it. If a scalper takes 5 trades a day, paying $5, that's $25 US in commissions. If I take that 5 days a week, I'm paying the broker minimum $125 a week for commissions just to trade gold. I could trade US30, save myself those commissions, then I have an additional $125 in my pocket, and I can go and buy 10 trades a day, paying $5. That's $25 US in commissions. If I take that 5 days a week, I'm paying the broker minimum $125 a week for commissions just to trade gold. I could trade US30, save myself those commissions, then I have an additional $125 food. I can buy myself lunch, right? It's money in my pocket. So that's why I choose to trade US30 over Dow. Being smart with your money, right? Why give someone else your money when you can have it in your pocket and trade, as opposed to gold, which is very choppy, can get very whipsaw action. It's very manipulated. It's a great way. If you're looking for moves 24 hours a day, gold moves in Tokyo, gold moves in London, gold moves in New York, gold moves right now. Like if 24-hour trading, yes, gold is great. Is US30 an ideal pair to trade? An ideal index to trade in London? No, it's a New York asset. It's a New York security. Is it good to trade in Tokyo? Not the best, right? So you're limited to getting the good volume with US30. But if you want to trade something across the board, 24 hours around the clock, gold is the best, in my opinion. Okay, so we didn't get that new low, right? It opened. We didn't get that push down, so it's higher low coming back up. So I'm sitting with a break even of 20% of my trade. But if it continues to hold, we're watching. So what did I say? Did the opening balance have more sellers or 50%, right? 50% is nice if you get that retracement right away, but whoever sold this candle, the opening balance is stronger than just 50%. So far it is still holding. However, buyers could engulf, and then next bar could be coming right back up. It could trade right back into the red zone and then continue pushing down. Okay, but we're going into Warsh's speech in the next 1 minute. Okay, so I have a high probability I'm going to get stopped out at break even because Warsh is speaking right now in 43 seconds. He'll be coming to the podium. He's not there yet. I have it on my TV when he's coming up. And guys, I'll be wrapping up this call at 3 p.m. Okay, so I appreciate everyone on the call. Thank you to everyone who hit the like on YouTube, subscribing to the channel. Join Stock Sniper Trading. You get more private education, private live trading. It's a win-win. You get to be part of the community and trade alongside all of our snipers. And to everyone on Zoom, guys, it's going to get more interactive coming next week. I'll be with you guys. And I want you guys to unmute your mics. I'm about to get tapped out right there. Okay, so I'm tapped out at break even on the 20%. All good. So I'm happy that I took out 80% on that candle coming down. Okay, no, I don't have any regrets, right? Even if it dropped down further, okay, it's nice. I would have made some more, but that's what runners are for. That's how I trade. Not for everybody. Okay, I'm not saying don't trade. I'm not saying trade like me. I'm saying analyze price action like me, but don't trade like me, okay? That if I say that was my daily goal, no one would believe me on this call. So I have nothing to prove to anybody, but I'm not leaving 75 pips hanging around on the table because that's food, and food, that's food. I look at pips as food. I like to eat. I'm going to buy some jerk chicken and mangoes right after this call. Okay, so Kevin Warsh is out. What do you say? Good afternoon or good day? Let's see what gold is doing. I can turn the volume up a little bit to hear what he's saying.
Today, as you know, our committee decided to vote.
Can you guys hear?
9-3 vote.
9-3 vote.
The target range for the federal funds rate at 3.5 to 3.75%.
Do you guys hear him?
The committee is continuing its policy of making ample reserves in the banking system. The economy is showing impressive resilience.
He'll be in the background.
Recent shocks, the trends are positive and reveal solid growth. Job gains have kept pace with the workforce, and the unemployment rate has changed little.
Oh man, it tapped right back into that red zone, and now the drop could be coming now. Oh man.
You've heard this before, but we will deliver price stability. As before, the policy statement.
Oh shit.
It's steering clear of forecast.
It's going to get volatile now, guys. Get ready. This is what the market's waiting for.
Uncertainty, however, does not mean a lack of clarity. For some households, businesses, and market professionals, 5 years of high inflation have left a mistaken impression that's hard to shake, that the Fed's implicit inflation target was somehow above 2%. Let me reiterate, there is no soft inflation target. There is no soft implicit target, not on this committee's watch. There's only a target, and it's 2%. Not one of my FOMC colleagues is under any illusion.
That would have been full TP down there, guys. If you're on US30, if you still didn't get out on the break even, right down there. You see the red line at those bodies? That was that 120 pip move down. If you got it, if you were still in, right? I went to a break even.
This Fed will not waver. Our credibility rests on performing our duties.
And we're not too far away from today's daily low on US30.
Americans are right to expect that because our nation's prosperity depends on it.
And gold could be retracing right back down to where FOMC started, right? And it could come back down. So let's see if gold closes below or holds the high of the day.
2 economic developments are worth highlighting. The first is a very notable change since our last meeting.
See the indecision with Kevin Warsh's speech? It came up, back all the way down, now coming back up. Still just consolidating. Black, blue, black.
Market interest rates between FOMC meetings are among the most significant in the last 2 decades, ranking around the top decile or so. But if the committee didn't change its policy rate, what happened? In the intermeeting period, market attention centered on real data and real economic developments. Prices
so it got choppy now. We're trading sideways on US30. And gold is, I want to see if it will come retrace all the way back down to here or hold. If it holds, it could go one more leg back up bullish.
And market prices will continue to respond in the direction and magnitude they see fit.
And if you're on Financial Juice, all of his remarks are right over here.
After all, the central bank need not always and everywhere be the center of attention.
Fed swaps no longer fully price in a September rate hike. Okay, so no, they're saying no longer a rate hike in September. Keep that in mind, guys, after today when you're trading.
I want to stress, of course, that decisions by this committee matter a great deal. And where necessary and appropriate.
Okay, so Fed's opening statement, there is no soft inflation target. Target remains 2%.
Is one that I noted at the congressional oversight hearings this month, but it's worth repeating. The most striking feature of the economy is the strong growth of business investment. The surge in high-tech CapEx has been remarkable, but that does not necessarily make the Fed's role any easier. In the AI-related category of high-tech equipment and software, the most recent data shows 4-quarter growth rates of nearly 20%. This is helping to sustain the heavy momentum of manufacturing output. More generally, CapEx is preparing the ground for future growth. Nonetheless, the precise timing and magnitude of effects on the supply side remain hard to predict. FOMC meetings produce policy decisions, but just as important is candid discussion of the big things that matter most. That too is a priority.
Who do you guys like better, Powell or Kevin Warsh?
In our meeting, vigorous discussion centered on 4 questions.
Do we miss Papa Powell?
First, we talked a lot about the implications of the past.
Yeah, I miss Papa Powell.
Inflation on the current policy conjuncture.
You don't know yet, Justin? Powell helped print money for a long time.
Second, my colleagues and
yeah, Powell was standing up against Trump. He didn't take Trump's shit.
Military conflicts, energy supply disruptions.
Okay, so we're reversing right now. We got to watch for a closing bar on gold. Also, wow, like look at US30 now. Now it's clear consolidation. Like if you were to track those bodies right there, that's our consolidation. Black, blue,
Third,
black, blue.
we took up the related question of price increases arising from shocks. The business capex boom, for example, is driving up prices of memory and logic chips and associated AI infrastructure.
Okay, now he's talking about AI
Do
infrastructure.
these changes indicate a broader inflationary dynamic, or do we just focus on them because they are under the bright streetlight? Finally, we discuss monetary policy tools and strategies for achieving stable prices. If, as the Fed has long held, interest rate policy should be its primary monetary policy instrument, how much
Okay, so
accommodation
US30 is
are we
holding
getting
its
from the
low of the
balance
day,
sheet?
coming back up.
In all of this,
Let's
our
see.
work is
Again,
advancing at the
it could
Fed.
trade right back in that red zone and go
We're
back down.
asking
Let's see if
the
the
right
buyers can
questions.
technically close
And in this
above our
confidential
hourly
time,
resistance.
We know how very much depends on getting the right answers.
But look at guys, like where I pinpointed those bodies when we were in the sell, that would have been my full TP right down there. We measured it for 120 pips. That's why I trade to these levels, guys. Okay, even on FOMC, you can see how clearly it plays out as well. Okay, now he's getting questions from the audience.
In the absence of forward guidance, I'm wondering if you could tell me what message are you getting?
And we have one more minute to go to the close of this candle.
Policy ought to be right now.
So we've established 5-minute support at this daily yellow line.
I'm not counting. The message from markets is the message from markets. What I've really been trying to do, Steve, as I think you appreciate, your colleagues appreciate, is getting an unfiltered message from markets, getting a direct message, letting buyers and sellers meet at prices for treasuries, for the foreign exchange value of the dollar, and then trying to judge for ourselves, what does that mean about our remit? How are we doing on inflation? How are we doing on employment? We're trying not to interfere with that market signal. That's part of the reason why we've been somewhat spare in our words, why we pulled back from forward guidance. So they're reacting to events, I would say, much more directly over the 42 days since we last met. This is a good thing. As I mentioned in the prepared remarks, we've seen a material tightening, not just in nominal rates, but in real rates too. And we're observing it. We're trying to stay out of that because, you know, many of you might be interested.
Here's the close on
in
gold.
reaction function.
Got a nice bullish
We're
candle.
interested in the reaction of financial markets.
Okay, any pullbacks
I get that,
to about
Mr.
50%
Chairman.
of it.
I guess the follow-up question is,
It's right at that, lined up with the 9 EMA, right at around 4,065.
and if its real rates are
Okay,
higher,
it's still
it
holding.
would suggest that that's where the funds rate ought to go.
Yeah,
Shit,
so,
my spreads are high on gold.
I'm sorry, it's your question.
Oh, there it is, 0.5. It was straight. Oh, wow, it just spiked to 3.
Markets is an imperfect
Ooh,
business.
these are some insane spreads on gold.
Market pros
There it is,
can
back
take
down
these
to
signals
less than 1.
determine
Okay, that's where I like to be
offer,
trading.
some
Not around
speculation.
3.5 pips.
First, as we said in the FOMC statement that you got at 2 o'clock,
Okay, I'm gonna go on a buy
output is solid.
on gold. Buy on gold. See if we can continue to break through the red zone, fill those upper wicks, and maybe drive to the daily position of 4,095. I'm gonna buy on gold. My stop will be right below the red line. Okay, tight stop, right below 50%. Okay.
And that's why we're seeing a tightening both in nominals and in reals.
I waited for my spread to come down to less than 1. There, 60 pips, guys, right through there, 60. Okay. I don't want to go to a break even yet. I want to clear this red zone, then I'll go to a break even. That would be about 80, 90 pips up there.
This meeting we saw three descents.
Did you see how I waited for my spread to come lower? It was trading at 3.54. I didn't like that. As soon as it got below 1, I took the buy.
By them at this stage. Thank you.
So I guess I shouldn't give you their best arguments. I'll give you some others. So you were right. I asked for a good family fight and I got one. That's the purpose. That's the design feature. I come into this meeting, even this press conference, heartened by what I've experienced the last 2 days. Most of our discussion were on
Good push. Let's push right now into 3 minutes into the candle. That's a good push. Got a big order there right at that daily yellow line. Let's see if we can push. I'm taking my stop loss just right below the wick of this candle, okay? So I just moved my stop loss. I only have 40 pips of risk on this trade.
That's our North Star. So there was a lot of agreement that
I want to get to a break even soon. If we can push one more, like just above this wick. Here, we're getting there. 4,079, it's there. Come on, push to 80. Let's go. There we go. I'm going to a break even right now. Break even on this trade. Again, another break even. So it's right at 70 pips. If we can get to the wick, it's 70 plus, could go. I'm at a break even. Don't want to give back any profit from the US30. I want to trade really responsible today. You can't lose money with a break even. I want to trade with proper risk during FOMC. We got the candle that we want. The candle's building. Now we just got to break our high and get through there. And we're going to drive to 4,080. 90 seconds to go. Let's see if we get a good push into the close. That would be awesome. And we could easily get 100 pips out of this. There we go. That's a great push. We've created a new high. Let's go. Now build. There we go. 80 pips. Fill to those wicks. Oh, right to the top of the red zone. Come on. There we go. Good push. There it is. 100 pips. Right to that wick. I'm clearing out 80%. 100 pips. 4,084 and 85 right there. Out at those wicks. 100 pip move. 80% out, 20% break even, guys. That's 175 pips secured with 80% on two quality trades, waiting for pullbacks. Guys, if we get to that daily yellow line, that's a 200 pip move. If we close blue above red zone, we go red to green, we build off of it, we get up there. 30 seconds to go. We got to clear these highs right up here. And all while managing risk at the same time. How much drawdown? 0 on both of these trades. I can be more focused, guys, when I'm not reading YouTube chat. This is how I trade. But I don't know if you guys caught that. I didn't take the trade when my spread was 4 pips. I waited for it to come back down to the 0.5 where I'm comfortable because I know that the volatility is subsiding and I got filled at the proper moment. That's why if you want to learn how to scalp the markets, you're going to need to learn that. Okay, guys, did we close above? Yes, red to green. So if we build a little bit of support, we can, with this volume right now, we should be able to fill these wicks, no problem, and break out of here. So we got some support. Let's break now, but because we got 5 wicks here. 1, 2, 3, 4, 5. So we want to break through this. Squeeze right through here, right to that daily position. That's 200 pip runner to get it up there.
Market judgments have moved up on what nominal rates are across the treasury curve. That doesn't mean we take them as
guys, hit the likes on YouTube. There's 700 of you guys. Subscribe to this channel if you haven't already. We'll do this live with you guys every single Monday, okay? Thank you, guys. We appreciate it. This is a call to action. Subscribe if you're not subscribed already. Who doesn't want that? Did you guys just see what we did on this call?
I think have quite a bit of decisions to make. I'll see if I can put it this way.
Don't be upset at me that I'm not reading the chat. It's for our own benefit, guys. I know that the guys on YouTube who are concentrating are learning. The guys that are spamming and playing games, we are not entertaining them, okay? We're here for serious traders, and I know that there's serious traders on YouTube as well.
Many ways in which it affects the real economy.
Come on, gold. One push. Here we go. We got it. That's a good. There we go. Okay, that's 150, 160. Swiftly, my car goes. Take some money out, guys. Get some money.
Close call on holding versus tightening. Well, I think
don't wait for me to do anything. You do your own thing.
The broader discussion to my ear.
What's US30 doing? US30. Okay, if you guys were following it, it closed. Guys, see, we could have taken a trade on US30. The hourly resistance bailed back to support. Did anybody trading US30 go red to green? Look, and it's going. It's filling the wick. So a nice little retracement. We sold that retracement, got out, thankfully. Good. And then look how it closed right back up. I was on the gold trade, but if I was on US30, I don't like to say I could have done this, but a buy was looking proper.
Could people come to different conclusions?
Wow.
Absolutely.
Okay. So see how the market reversed with Kevin Warsh. Notice the time. 235, 240, 245. Ever since Kevin Warsh started coming and talking. Reverse the market. That's beautiful on US30. Gold too. Yes. We're filling 175 pips. I'm going to close my entire 20% up there. I had a fantastic call right there. 4,000 filled. It slipped me up to the upside. 4,093 fill. See, I got more than what I was looking for, because with FOMC, if you get the right direction with volume, you get slipped in your direction. Sometimes it kills us, but sometimes it works in your favor. So they slipped me up and filled me at 4,093. That's a 200 pip move. Sonia, is that a W on Dow? Like, are you talking about inside here or the overall pattern? Sonia, if we're looking at the bigger pattern, came down, daily low, this neckline right here, right? The zone. Forget about the FOMC breakout. That was a little, but yes, when it came back down, higher low, double bottom right there. And there's your continuation. But also Sonia in here, you know, when I say when 4 bars are barcoding, black, blue, black, blue. You can look at those 4 bars as a double bottom as well. It came down, back up, came down, and then there's the W with 4 bars. When I'm scalping the 1-minute candles, that's what I traditionally look for in consolidation, a 4-bar play. And there it is. There's the candle that broke out and continuing to go. But yeah, you got multiple confirmations of double bottoms. But the most important thing, Sonia, to notice is when it was coming down to the lowest point of the day, the first bottom that was established, look at how Kevin Warsh kind of saved the market from breaking down. And that same zone where I said to everybody, that's where my runner, if I had it still 120 pips, I would be securing my position right there, because that's what started the move right above the lowest point of the day. And if you see Sonia right there, that in fact is the higher low, protecting the daily low and your double bottom driving. So good observation, Sonia. You got it. Guys, sorry if you can't hear me. I have it on loud. I'm going to turn it down. I had the background. I wanted to listen to what Kevin Warsh was saying. Wow, and gold is breaking out. Guys, we're going to kiss that all-time high trend line. Okay, so if you're still in it, I'm out. But if you're still in, okay, that's a strong candle. It closed above a daily position, okay? Capture 50% of it. Cut it in half if you can. Okay, just take this red line, cut it in half. Now it's trading at the daily level. Remember where we got this yellow line from. Okay, so if you look at the daily candle on the daily chart, we are not too far away from filling Monday, July 27th wick this week. And there's our all-time high trend line. So when you look at the bigger picture, look at it. We might get up there and close. Maybe this week we're going to have a breakout of gold breaking through here. It's building beautifully. Held its support, and obviously it's liking what's going on with FOMC because the US dollar is selling, treasuries are selling, NASDAQ is bullish, US30 is bullish, markets reversed.
Mr. Chairman, Edward Lawrence from Fox Business. I guess I want to drill down maybe a little bit. What specifically in your mind would be the argument then for a pause today?
Nigel, you got your gold runner still playing. Nice. Captain Boom, you got your runner. Good. Fish and chips. We can get some fish and chips with the runners. I love fish and chips, guys. I'm taking my parents out. My dad loves fish and pitch. Fish and chips. Not I was going to say perch. He loves perch. So I'm taking him out to the lake for his birthday with my mom. Out in Lake Erie there. There's a nice little cove, it's called. They make the best perch fry, pickerel, with the tartar sauce. It's unbelievable. It's a nice little place. And 4,100 is a nice psychological number. So it came down, respected the daily. Guys, if you're still in this, oh man, I like the woulda, shoulda, could. I wish I held. I wish I did this. But guys, this FOMC was pretty good. No complaints here. We waited patiently. We watched what happened. We didn't fall for any fake outs. We waited for candles to close. We did a great job on today's call. We managed our risk, hopefully, which we did. We established a tight stop loss. Okay, there's other traders that trade FOMCs with a 200, 300 pip stop loss. You saw I wasn't trading. I was like right below previous candles, because if you wait patiently for a good entry, you don't need to have a crazy stop loss. You can have a tight stop loss. And you notice when you know what you're doing, some trades can go directly right into profit. And with today's volume, if it gets there, you could go to a break even, make your decision easy when you're up 50, 60, 100 pips. Okay, and now, again, just use your analysis on what's going on with US30. We're getting right up to that daily resistance block right there. Any pullbacks could be buying opportunities back down to here. It's now breaking right back out, okay? Guys, I have like 5 more minutes on the call, and then I'm going to take off. I hope you guys learned something today. I hope you guys had some fun. Thank you to all the viewers on YouTube. I apologize, guys, if I didn't see your comments or chat or anything like that. This is the first time I have ever not looked at the YouTube chat in 6 years of doing this. So you'll maybe get the best out of me where I don't need to engage in silliness, because I find that that was affecting everybody on the call. And I know that there's a lot of guys that want to really learn about trading, and that affects them. And I apologize for that, but sometimes I get distracted myself. I don't get distracted with candles. I get distracted with people that are here just to play games. Okay, you can go do that on other channels, but not on this channel. We take trading and education very serious here. And I'm not going to allow that to affect others. And I can't wait for next week, guys, going private with you guys on Zoom. We'll have a lot of fun together, okay? You guys can tell me what you guys want out of it. I want you guys go this weekend, please, and buy a microphone, because I want you guys to get a nice headset where you can unmute it and you can talk to me and ask questions. We can do this in a group environment, and it would be a more of an interactive Zoom, which we have not had in years here. So I'm looking forward to it. Okay, guys? Don't be shy. Nobody should be shy here. And guys, we are now trading at the all-time high trend line right there on gold. Crude oil skyrockets after Iran targets Jordan. US30 forces hit Iraq. Okay, guys. Be careful trading oil going into the weekend as well. But guys, that's it. We had a great call. I'm going to go get some lunch right now. I made enough pips to go buy some lunch, and hopefully you guys had a great call. Thank you to everyone on YouTube. Appreciate you guys. Again, once again, hit the likes, subscribe. We'll be back with you guys Monday morning, where we're going to be doing one live session with you guys once per week. And the rest we're going private with you guys in Zoom. Dave and I had a little conversation last night, and we decided that this is the best for now what to do. It's not forever. We'll then start to introduce 2 sessions a week back on YouTube. Slowly we'll get back on it, where we'll go back to the 5-day schedule. But we want you guys to still have the public live trading once a week. I'll upload education videos for you guys, like 20-minute videos, breaking things down, breaking what we do in the live Zoom classes as well. And then you guys in Zoom and Discord, you guys will be getting more out of us now. So I thank you for all of these years being patient with me, but we really wanted to give back to everybody who couldn't afford a membership. But it's time now we take the community, myself, a little bit more serious. Dave has always been here with you guys, but it's been hard for me to let go of YouTube, so it's a big change for me as well. But I want to say that I love everyone on YouTube, guys. This is nothing negative. This is a positive. You're welcome to join us and sign up. There's always going to be 50% off promos. We want to earn enough pips for you guys where it will pay for your membership through the trade ideas signals, through Dave's live trading, through trading with me, for trading with all of the snipers in the Discord, guys. All of them are sharing their charts and trading as a team together when Dave and I are sleeping. So it's just making our community that much stronger and for the years to come. Okay, guys? So I hope everyone enjoyed their first FOMC. If it's your first one, I hope you guys learned. It wasn't as crazy volatile as previous FOMCs, but if you study it, you see the move was a buy right off the top. But if you didn't do anything, then it sold off, it consolidated, then went back up. Same with gold. It broke out of the gate. Okay, if you bought, you could have continued to buy, but however, there was a nice pullback coming in when at 2:30 when War started his speech, and look at where it pulled back into our daily yellow line. That's why top down is so important, guys, to help you understand with structure. And then as it came up, I saw the bullish engulfed candle, and that's when I took that buy. I got out a little earlier. Woulda, shoulda, coulda. Had I held, it would have been fantastic, but I still secured 175 pips on today's call. So thank you, guys. Have a great day. Enjoy the rest of your day. God bless everyone. We'll see you guys tomorrow. Thank you, guys. Have a good day. Boom. Awesome. Thank you. Time to walk the dog. Enjoy, brother. Nigel, have a great day. Justin, I'll see you. Simon, Kira, have a great day. Krina, thank you. It's my pleasure. Thank you for joining us, Krina, and learning about this education. I appreciate you guys. Mike, have a great day, boss. I'll see you guys. Sergio, everybody. And if I missed you guys, I'll see you guys tomorrow. Keisha, Rafi, Awesome. Thank you, guys. And everyone on YouTube, have a great day. God bless, guys. See you guys tomorrow.